What's up, boss? Yo. It's your boy, the insurance junkie, your fiduciary fellow, the all-star advisor along the hall, your social media insurance broker, and I'm back today to wipe and tap on your head with yet another ADH wealth solution. What's good, my boy? And today we're gonna be talking about investors, different types of investors, and so on and so forth. Because all too often we're hearing too much shit about what an investor is and what isn't. What's good, my guy? Sitting here going live on the podcast, man. I'm talking about, I'm tired of seeing all this bullshit, man. Everybody talking about the election and shit. So right now I'm talking about investors. What is an investor? This, that, and the third, because niggas don't know.
Right.
You know what I'm saying? Like, it's levels to the shit. You know what I'm saying? So I'm having a conversation. They'll just hear it. So right now, what I'm gonna be talking about is like the different levels of it, right? Because what most of us are when we're doing like the Acorn, the Robin Hood, all that shit, is we are what's called a retail investor. Retail investors is you're the farthest away from everything. They protect you the most, right? So you got FINRA, which is the Financial Industry Regulatory Authority, SIPC, SEC, NASAA, and a whole bunch of other government agencies. But you want the bus down?
Yeah.
All right. As a matter of fact, I think I just sat on my shit. Hold up. That's all good. All right. So, good morning. Then you got then you got so retail investors are like the folks who was dealing with that whole. It went out. Shit. Hold up. Let me go see if Eddie got flame on him. I'll be right back. I'm gonna go get a lighter from Eddie. What's up, youngin?
Hey, now, how you doing?
So yeah, you got the retail.
What up?
Rael, what's good, bro? So I'm doing two things right now. I'm actually talking with one of my brothers out here, but I'm also explaining, the different types of investors. Once I'm done doing my morning walk and shit, I'm gonna go up and give y'all some visuals. But so first you got, like I was saying, the retail investor, right? And so that is your person who doesn't have absolute protection from everything. So those are people who went into like what you call it yeah, that's people who went into like Acorn and Robinhood and Stash and things like that, right? So those are retail investors. Retail investors don't have the full protection that you know, that the other investors do, right? So retail investors, you're literally just at the lowest rung. Generally, you're not in like the high demand investments or anything like that, because generally you don't have the liquidity or the funds to be a higher level of investor, right? Then you've got uh, accredited investors, right? So accredited investors meet the accredited investor test, right? And the accredited investor test, there's income requirements, and liquidity requirements. And once you meet those requirements, you can become an accredited investor. As an accredited investor, you're actually able to invest in private offerings, right? And then you've got an institutional investor. Institutional investors invest in tranches. So they're investing hundreds of millions of dollars at a time, right? Um, and this is generally what you would consider like those hedge funds, right? Like I said, give me a few minutes, y'all. I'm just kind of laying out what we're going to go through. And then, I'm going to uh, break it down for you guys in full detail. Now, you've also got other investors who are like, you know, uh, dividend investors, which can fall under all three, right? Whether that be retail, accredited, or institutional. But the difference between the three is really number one, the level with which you're doing it, and participating, right? For example, Warren Buffett is an institutional investor. Yes, he's accredited because all institutional investors are going to be accredited investors because they have the liquidity. How's it going, Chief? They have the liquidity to do so, right? If you're investing $100 million, you best believe your net worth is at least $1 million, right? Um, so, like I said, we're gonna go through all of the different types and everything like that because it's important that folks learn this stuff, right? And you guys will be online with these, bullshit ass gurus, quote unquote, teaching you investing, and they're not. They're teaching you nonsense, right? They're teaching you how to make them rich, right? They're basically making you a gambler. And you might, a broken clock is right twice a day. So, yeah, you might get lucky off of some of your bets, right? But that's what they are, is bets. You got rid of your chair? Yeah.
My ex-husband put a track on my phone from T-Mobile.
Oh, shit.
No, them tracking things.
Yeah, I know.
Oh my kids, that's why I can't move.
Oh, no, really?
I told you not to do because I put a phone on it. And so I told him, I said, I can't move nowhere if I have to go to court or something like that.
Yeah.
And my battery down when he put the track kit on.
Because it's draining the battery. Yeah, that's terrible. Well, I'm on the phone. Yeah. I'll talk to you later. All right. I will. So, yeah. What was I saying? I don't have any cash on me. If you would have caught me 15 minutes earlier before I went to the corner store, I ain't got no cash on me. I'm sorry. I just spent it at the corner store. All right. So, again, when you're looking at a lot of these, online gurus or I trade stock, I can teach you how to trade Forex, I day trade options. Even if you are doing it and you're finding some modicum of success, unless you are a pattern day trader, you're not really successful at it. Now, am I diminishing what you're doing? In essence, yes, but honestly, no. The reality of it is, though, that you're not exactly, well, unless you're paying for the securities in full in a cash account, which is why you're buying small amounts, right? You're not spending, you know, upwards of $5,000 on a trade. Because if you were, what you don't know is you're getting something called an SAR, a suspicious activity report, regardless of what platform you're using to trade on, because those platforms are actual brokers. And everybody says they have these free trades and that trust me, there's always money management fees, right? So you may not see the fees, but they're baked in. You're also on those trades. If you're gaining, you're getting a 1099. So now everybody wants to talk about what is it? What is it? Tax loss harvesting, which nobody actually knows how to do that, and that's just another malarkey term that people have started to use, right? Uh, just like dollar cost averaging. That's some bullshit. You know what dollar cost averaging is? Dollar cost averaging is what I call, and what people on Wall Street call, the short strategy. What is the short strategy? Well, that's what you would consider, oh, I'm dollar cost averaging because somebody came up with that fancy term for your happy ass. What is dollar cost averaging? AKA the short strategy. Well, I'll give you actually a lifetime example. I used to use Stash for my retail investments, right? And Stash had Tesla stock, and this was like 2019, right? So they had Tesla and they had Ford, and everybody was getting, up in arms because Tesla's at, I don't know what it was at the time, like $800 a share, right? Meanwhile, you had was it Ford that just kept crumbling and crumbling and crumbling and falling and falling. And the more it went down, Ford, the more of it I bought. That is what you call a short strategy. Short strategists like when a stock is falling, right? What's going on? Right? And Gyogami, what's going on? Right? So, short strategy is when a stock is going down, and a short strategist enjoys that the stock is going down. Why? Because they're going to buy more and more and more of it. Now, the dollar cost averaging is a little bit different. It's, hey, listen, you have a budget of $200 a week you're going to put into quote unquote investing every week. No matter what it does, you put the $200 in there. But a short strategist realizes, hey, I am buying at a discount because since Ford was $4 a share, if I spent $400, I bought 100 shares, right? Now, and again, these are arbitrary numbers, but it's easier to explain in that manner. So now I turn around and I realize that, hey, Tesla did their stock split. Now they're doing a 2-for-1 split. So they're going to split it and make it $400 a share, but instead of one share, you have two shares, right? Meanwhile, that same $400 bought me 100 shares of Ford. Now, Ford went up eventually. It went from $4 to $7. That's when I sell, right? That's buy low, sell high. That's the short strategy. So that's really what dollar cost averaging is, right? The reason they call it dollar cost averaging is because you're going to continuously buy no matter what, through the highs, through the lows, right? So, for example, when Ford went up, you'd still spend that same $400, but because it was $7 a share, you wouldn't get the whole 100 shares, right? You get what, 70 shares or whatever, right? But the problem is nobody ever talks to you about, again, risk tolerance, time horizon, or exit strategy. So you've gotten into this position with dollar cost averaging. Now you got 7 bazillion shares of, whatever stock you got. Well, what's your exit strategy? First of all, what is your risk tolerance? Because while you're holding on to this, you're holding on to it with the hopes that it accretes, meaning goes up. Well, what happens if it doesn't accrete? Right? Now, you have to realize, well, damn, I'm in a position where this could go to zero. And if this goes to zero, what am I gonna do? Right? Because if it goes to zero, can I handle the fact that I just put $20,000 in here and now my 20,000 is zero? Or am I gonna want to jump off my roof? Many people are gonna want to jump off their roof when it goes from 20,000 to zero. So you don't have the risk tolerance to be investing, right? Because if it goes from 20,000 to zero and you're going to jump off the roof, then you can't handle what you're doing, right? Now, let's look at time horizon. Okay, you're dollar cost averaging, you're investing. Yeah, yeah, yeah. What's the ultimate goal? Because the idea of investing is just like the young lady that you heard me talking to who was like, oh, I'm playing the numbers 111, da 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 da, right? Well, what is the ultimate goal of playing the numbers? You don't play the numbers just to play the numbers. You play the numbers so that eventually, hopefully, you win and you can get money out of it. Well, that's the exact same thing with investing, right? Which is why people have a time horizon. Meaning, hey, I put this money in here. At some point, I'm gonna get this money out, right? At some point, I ain't just putting money in there and calling it a day. And yeah, you'll hear people telling you, oh, well, just live off of the dividends. Listen, most people ain't investing enough to really live off of the dividends. I'll be completely honest, right? They're just not. You don't have the liquidity to live off of the dividends, right? Because you ain't investing enough. It's harsh, but it's reality, right? It's just like, hey, as much as I want to, on a 10-foot hoop, I will never dunk a basketball unless you give me a trampoline or something, right? Sounds harsh, but it's true. It's just is what it is, right? That's the reality of what I got to deal with being 5'8", right? So now the exit strategy is again the time horizon is when you're going to want this money. So is that and most people have no time horizon, right? It's just it feels good and sounds good to say I'm investing. What's your goal with investing, right? And what is your ultimate goal? To get the money out. So that's your time horizon. So do you want it in 5 years? Do you want it in 10 years? Do you want it in 50 years? At some point, you're investing, hoping that your investments accrete so that you can, for lack of a better term, cash out and then go sit on the island and drink Mai Tais all day. Right? That's your ultimate goal with investing. It's not just so that, again, you can be an investor. It's to get the money out. So that comes down to, okay, now let's say you figured out your time horizon. Are you a long-term investor, meaning 13 months or more? Or are you a short-term investor, meaning 12 months or less? Right? Then are you really truly a long-term investor? Right? Because the average time horizon is 20 years. Right? So that means I'm 41 today. I intend on having to want access to this money at the age of 61. Right? Or let's say 62. Right? So right now I'm 41 and at 62 I want this money. Right? Basically 20 years. I know it's technically 21 years, but basically 20 years. Right? So now I gotta hope that everything does well over the course of that 20 years. But then, what is my exit strategy? Who am I going to sell this investment to? Am I looking to sell it back to the brokerage? Do I need to sell it to a market maker? Do I even know what a market maker is? Because most people don't. First of all, because most people are not accredited investors, you can't even trade on the open market or purchase from the open market. You have to purchase from places like Acorn, Robinhood, and Stash because those are the only places that will allow you to buy. Well, that's untrue. Now you have Charles Schwab, who got smart and allows you to buy what they call stock slices, right? Which is a portion of the stock, right? Over an amount of time, which is generally a small portion of the stock over an amount of time, right? And while that seems cool, it's really not the best benefit for you. Again, because you don't get the full benefit of being invested, right? You don't get the full share of the dividends, so on and so forth, right? Give me 1 second here. I'm going to come to my computer now that I'm back in the house. And we're going to pull up some visuals, right? I'm also doing this because I know that a lot of folks who are my following, I see y'all in some of these other lives, and I know you don't particularly want to be there. You're coming for some kind of entertainment. But the problem is, we got a lot of folks who are up here with a bunch of useless bullshit, right? Oh, this guy said this about this one, and that, tra, tra. And that guy did this with that thing, and blah, 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 blah. And it's all this nonsensical BS that, especially, bro, we're in our 40s and above, or shit, even in our 30s and above. Like, if I look at YouTube right now, hold on. Because now I'm about to go in the studio. Give me 1 second, y'all. All right. Hopefully, y'all can hear me loud and clear. All right. Put a one in the chat if you can hear me. But let's just take a look right quick. If I look at my YouTube, so let's see what we got going on here. We've got, and these are just from the people that I know that a lot of us know because we frequent the areas. Real quick, Black Man, I owe you an apology from Mrs. Queen Sunkiss. She's upset about the quote unquote 20 some odd percent of black men that voted for Donald Trump instead of Kamala Harris. Who gives a fuck? At this point, Donald Trump is in office. We need to do something about that, right? Marlene Ayamone. How Donald Trump got the black vote. Victory lap. Who gives a fuck? Right? We've got somebody playing NBA 2K. Okay, I could deal with that. Roger Report. Men amongst men. Gynocracy gauntlet. Who the fuck? First of all, I thought you didn't want a woman leader. So why the fuck do you give a fuck about the gynocracy? Now, let's look at Aaron Clearney. Right?
Heroes, I guess. You know, I don't bat 1,000. I'll tell you that. I've done things
morning,
I'm not
brother.
proud of. I'll admit that. You know, but I'm kind of hopefully it won't ruin my legacy.
Now, I'm going to stop sharing that, but it's just, there's all this bullshit nonsense that's coming on. And shout out to my man, the Broke Genius. Shout out to the Underrated Darkness. Shout out to Sheed We Here. Y'all brothers be putting on some very informative information. Now, I'll give credit where it's due. When Sheed goes live, people come in. They're not with the bullshit. Right? When I go live, people come in. They're not with the bullshit. But when Underrated goes live, people come in. They're not with the bullshit.
but we might get 10 people watching at once. There are over 100 people right now at Roger Report watching, talking about the Thanos snap. What the fuck is that going to do for us, black men? Because at the end of the day, Trump's in, but 4 years goes by as fast as a Thanos snap. Now I want to see all y'all dudes who were Trump training. Are y'all still going to be on the Republican right? Right? And again, you know, it's I'm not gonna stick too much on that because, like I said, the title of this is what exactly is an investor. And while I'm at it, let me put the link in the chat in case anybody wants to come up. Right? But realistically, let's go to Google. Let's go to ChatGPT. Right? And let's take a look at ChatGPT, see what they say here. Try ChatGPT. Right? Explain in full detail what a retail investor is. Include income, net worth, knowledge, prior experience, requirements. So a retail investor, right? Let me make sure y'all can see this. ChatGPT is typing it out as we speak. So a retail investor is an individual who buys and sells securities or other financial assets for personal investment purposes rather than for an organization or institution. Retail investors typically invest their own money, unlike institutional investors who manage funds on behalf of others, e.g. pension funds or endowments. Retail investors make up a large portion of the market and include individuals who trade through brokerage accounts, retirement accounts like IRAs and 401ks, or other personal investment accounts like cashapp, Bitcoin, and all that jazz. So, characteristics of a retail investor. Retail investors vary widely in income level. There's no minimum income requirement to be considered a retail investor. This category includes everyone from someone investing small amounts each month to high net individuals who have substantial income. Often, retail investors' income level determine the type of investments they pursue. For example, higher income investors may have greater access to a variety of financial products and may invest larger sums than those with more modest incomes. Net worth. Similar to income, retail investors come from a range of net worth backgrounds. Unlike accredited investors, and we'll get into that, who must meet specific income or net worth criteria, such as an annual income of $200,000 or a net worth of $1 million or more, excluding your primary residence. Retail investors do not need to meet any particular net worth threshold. This accessibility is a defining aspect of retail investing. Anyone with the financial means, regardless of wealth level, can participate in the financial markets through retail channels. Knowledge requirements. And again, the only reason it's breaking it down like that is because of what I told it to do. Retail investors do not need any specific knowledge or certifications to participate in investing. Many start with little financial expertise and gradually learn through experience, online resources, educational programs, or advice from financial professionals. However, retail investors who lack sufficient knowledge and understanding may be at a disadvantage due to the complexity of financial markets. Regulations and financial advisors aim to protect retail investors from products that may be too risky or complex, but the onus of understanding the investments still lies with the individual investor. 4. Prior experience requirements. Unlike institutional or accredited investors, retail investors are not required to have prior investment experience. This lack of requirement makes retail investing widely accessible, but also exposes inexperienced investors to potential risks. Many start investing with simple products such as mutual funds, ETFs, or individual stocks, which often you can't buy individual stocks. They require minimal prior experience to understand. Some investments that are restricted to accredited or institutional investors may require specific financial experience due to their complexity and risk, such as hedge funds, private equity, and certain types of structured products. So this is why you'll get all those bullshit people telling you, buy term, invest the rest. Well, it sounds nice, but you don't got the complex understanding to be able to even understand most of this stuff. No shade, but that's just like, I don't have the complexity to understand the medical field. Right? It's some complex stuff. Which is why you rely on the people in the medical field to teach you this stuff. Right? It's kind of the way it is. So, types of investments available to retail investors. Stocks and bonds, only through brokerage accounts, though. You can't buy on the open market. Mutual funds, pooled investment, mutual funds and ETFs, because they're the same thing. Pooled investment vehicles that offer diversification and are often professionally managed. Options and futures, derivative products that allow for strategies like hedging or speculation, though they carry more risk and often require approval based on the investor's experience. REITs, or real estate investment trusts. It's a way for an investor to invest in real estate without buying property directly. Cryptocurrencies, digital assets that have become increasingly popular among retail investors, especially younger ones. Protections and regulations, right? And I know this stuff, it's really boring. You know, it's not as spicy as, you know, the most recent bullshit ass guy who's heavy on Pornhub, you know, talking nonsense about so-and-so's wife. You know, that's the tea that folks want, right? But salute to the 3 or 4 people who are here. Y'all are getting real knowledge that y'all can go out in the world and do something with. Because the last time I checked, you couldn't pay your mortgage with what the fuck Fathead is doing. Because retail investors often lack sophisticated knowledge and resources of institutional investors, regulations exist to protect them. SEC and FINRA oversight. The Securities and Exchange Commission and the Financial Industry Regulatory Authority enforce rules that require brokers to provide accurate information and ensure certain products are suitable for retail investors. Now I got to pause there. I got to go to FINRA. We got to go to FINRA, right? Because, again, FINRA.org, right? Because, again, like I said, you may think you're day trading, but you're not. Day trading. Let's see what FINRA says about day trading. Do you actively trade stocks? If so, it's important to know what it means to be a pattern day trader, because there are requirements associated with engaging in pattern day trading. What is day trading? Day trading, as defined by FINRA's margin rule, refers to a trading strategy where an individual buys and sells, or sells and buys the same security in a margin account on the same day in an attempt to profit from the small movements in the price of the security. FINRA's margin rule for day trading applies to day trading any security. I trade Forex. I trade options, including options. Day trading in a cash account is not permitted. I didn't say that. FINRA said that. So when I come and shit all over your person who says you're day trading, or even if you're day trading and you get offended because you're like, I made $1,700. The financial industry regulatory, the authority that's there to protect your silly ass, they say you can't do that. Now, the way around that is by paying for the security in full. So, day trading in a cash account is not permitted. All securities purchased in the cash account must be paid for in full before they are sold. That's why you guys are making $1,700, right? Dudes are making that. I know real scalpers, real day traders. Some of them work for hedge funds like Bloomberg. If they were to have a $1,700 hour, they'd be laughed out of their firm. You either got to have a $0 or like multiples, tens of hundreds of thousands. Right? So, in the cash account under FINRA rules, purchasing a security and paying for it in full as required by Regulation T and selling it is not considered a day trader. So if you calling yourself a day trader, but you paying in a cash account, you're not a day trader. So stop saying you're a day trader if you use a cash account, because you're not a day trader. Right? That's like me saying, hey, I am because I drive my car at a high rate of speed down the highway. I call myself a race car driver. No, I just drive fast. I ain't a racer. I just drive fast. There's a difference. Capiche? So who is a pattern day trader? According to FINRA rules, you're considered a pattern day trader if you execute 4 or more day trades within 5 business days. So all you guys who are like, I trade for 20 minutes in the morning and then the rest of my day is through. Well, hopefully that's a cash account. And hopefully, well, obviously you're paying for that security in full, which means you're not able to make money. Because yes, they do make money off of those minuscule shifts. But when you make $1,700 off of those minuscule shifts, that means you didn't put any money in there. Now, if you make $170,000, it means you probably put 25, 50 grand in there. And then you can enjoy the pips and dips. So we're going to skip all this. You can actually go to finra.org yourself and put that in the chat. Right? You can actually go to FINRA and find that out on your own. What are the requirements for pattern day traders? You got to have 25,000 in your account. Period. If you go to $24,999.99, you are not permitted to day trade. Period. Let's see what else they have here. Investing basics for investors. So, welcome to the world of investing. Whether you're new to investing or need a refresher, we've got all the information here to help you. Investment goals. Nobody ever talks about that. Setting goals to help us meet major objectives, from staying healthy to retiring with a well-feathered nest egg. Investment goals provide structure and purpose to the money we allocate to investment products, such as stocks, bonds, and funds. Investing and investment goal setting go hand in hand with sound personal finance practices, such as building an emergency fund and managing spending, right? You can actually get a course from FINRA, right? FINRA has tools and calculators, right? Now, let's go back. Investment products. Actually, let's go back to investing basics. Right? So, investment goals, risk. All investments carry some kind of risk. Stocks, bonds, mutual funds, and ETFs can lose value, even their entire value, if market conditions sour. Even conservative insured investments, such as certificates of deposit issued by a bank or credit union, come with inflation risk. That is, they might not earn enough over time to keep pace with the increasing cost of living. Again, fuck all those financial advisors who tell you all that bullshit because they're salespeople. So am I. But I'm bringing you to the source. FINRA. They might tell you, oh yeah, we're FINRA, SCPC, but they don't ever want you to go to FINRA or SIPC. Right? What is risk? When you invest, you make choices about what to do with your financial assets. Risk is any uncertainty with respect to your investments that has the potential to negatively impact your financial welfare. For example, your investment value might rise or fall because of market conditions. That's called market risk. Corporate decisions, such as whether to expand into a new area of business or merge with another company, can affect the value of your investments. Business risk. Prime example, Pepsi just fired like 500 people. You don't think that's going to have an effect on their stock? If you own an international investments, events within that country can affect your investment, political risk, and currency risk, to name two. Let's look at like Venezuela. Venezuela's money went down to zero, but I'm trading Forex. Well, a bunch of Venezuelan migrants came here to America. How do you think that affected your Forex? Things like BRICS are coming together. That's political risk. There are also other types of risks. How easy or how hard it is to cash out of an investment when you need to is called liquidity risk. Right? So I always tell you guys when they're talking about this invest the difference, well, you have a huge risk with liquidity risk because most of the time it's not that easy to just go, hey, listen, I want to take my $200,000 out. Another risk factor is tied to how many or how few investments you hold. Generally speaking, the more financial eggs you have in one basket, say all your money is in a single stock, the greater risk you take, concentration risk. In short, risk is the possibility that a negative financial outcome that matters to you might occur. There are several key concepts you should understand when it comes to investment risk. Obviously, there's risk and reward, time horizon, right? So the level of risk associated with a particular investment or asset class typically correlates with the with the level of return the investment might achieve. The rationale behind this relationship is that investors willing to take on risky investments and potentially lose money should be rewarded for their risk. You can learn about risks associated with specific investments by going to the risk tab for each investment listed in our investment products section. In the context of investing, reward is the possibility of higher returns. Historically, stocks have enjoyed the most robust average annual returns over the long term, just over 10% per year, followed by corporate bonds around 6% annually, T-bonds around 5.5%, and cash and cash equivalents such as short-term T-bills 3.5%. The trade-off is that with this higher return comes greater risk. So they say stocks have had a historic return of 10.3%. And that's been the S&P 500. Right? So this is why people will say, well, why don't you put your money into something that's going to get you 10%? They can't guarantee that. Right? Can't guarantee it because, yes, historically it's been 10%. But again, that goes with the averages because this year was 20%. And then for the next 3 years, it was negative 30%. And then this year went up to 50%. And then the following year it went down to 4%. And if you average all those highs and lows, it comes out to about 10%. And although stocks have historically provided a higher return than bonds and cash investments, albeit at a higher level of risk, it's not always the case that stocks outperform bonds or that bonds are always a lower risk than stocks. Time can be your friend or foe. Oh, wow, they literally talk about time horizon. Based on historical data, holding a broad portfolio of stocks over an extended period of time, for instance, a large cap portfolio like the S&P 500 over a 20-year period. I wonder why they use 20 years, because 20 years happens to be the average time horizon. Significantly reduces your chances of losing your principal. However, the historical data should not mislead investors into thinking that there is no risk in investing in stocks over a long period of time. For example, suppose an investor invests $10,000 in a broadly diversified stock portfolio and 19 years later sees that portfolio grow to $20,000. The reason they said $10,000 is because, like I tell you, the average minimum investment is $10,000. This is not me. This is FINRA.org, right? The Financial Industry Regulatory Authority. There's a reason they start with certain numbers as an example, right? So 19 years later sees that portfolio grow to 20,000. The following year, the investor's portfolio loses 20% of its value, or $4,000, during a market downturn. As a result, at the end of the 20-year period, the investor ends up with a $16,000 portfolio rather than the $20,000 portfolio she held after 19 years. Money was made, but not as much as if the shares were sold the previous year. That's why stocks are always risky investments, even over the long term. They don't get safer the longer you hold them. Which is why, again, you need to know your time horizon. Because, like, for example, I sat with people recently. He was like, yeah, man, I felt bad about that whole AMC GameStop. I wish I wouldn't have sold before the such and such and such. Well, you don't have behavioral finance. So, of course, you sold whenever you felt the need to because you didn't have a time horizon, right? Some people went in there, listen, I'm going to hold on to this for 5 years, come hella high water. Now, after 5 years, I'm going to get rid of it. But you kind of got to give it the old college try, right? You don't go to college and say, man, these courses are hard, I quit. You go to college and say, damn, these courses suck. Well, I got 3 more years of this shit, and then I'm going to get my degree. All right? This is not a hypothetical risk. If you had planned to retire in the 2008-2009 timeframe, when stock prices dropped by 50%, and had the bulk of your retirement savings in stocks or stock mutual funds, you might have had to reconsider your retirement plan. Investors should also consider how realistic it will be for them to ride out the ups and downs of the market over the long term. Will you have to sell stocks during an economic downturn? to fill the gap caused by job loss? Will you sell your investments to pay for medical care or a child's college education? Predictable and unpredictable life events might make it difficult for some investors to stay invested in stocks over an extended period of time. Managing risks. You cannot eliminate investment risks, but two basic investment strategies, which are asset allocation and diversification, can help manage both systemic risks, risk affecting the economy as a whole, and non-systemic risks, risks that affect a small part of the economy or even a single company. Hedging, buying a security to offset potential loss on another investment. And insurance products can provide additional ways to manage risks. Wait a second. We know that insurance is not an investment, but the Financial Industry Regulatory Authority is recommending that you get insurance products to manage risk. That does not mean a term life insurance policy, because term life insurance doesn't manage risk. Where the risk term life insurance manages is if you died inside of the next term. But that's all, that's it. However, both strategies can typically add often significantly to the costs of your investments, which can eat away at returns. In addition, hedging typically involves speculative, higher risk activities such as short selling, buying and selling securities you don't own, or trading in complex products such as options or investing in illiquid securities. The bottom line is that all investments carry some degree of risk. By better understanding the nature of risk and taking steps to manage those risks, you put yourself in a better position to meet your financial goals. In addition, knowing your risk-tolerant investment level or the amount of investment risk you're willing to and able to accept can make you can help you make the investment decisions that are right for you. Let's look at what they say about risk tolerance. So, risk tolerant factors. Investment objective. And you know what's funny? Because I was on JT the Pocket Watcher and somebody was like, oh yeah, a lot of people just get the SIE. Listen, I ain't worried about the SIE. I've been studying this shit since 2010. I just never got the securities licensure. It just so happens that a lot of people are thinking they're getting their investment license, getting a Series 6, because they went with Coco, the fuck me IMO or Primerica. And now you get your Series 6 so you can sell shitty mutual funds and 401ks. And basically the Series 6 is just a license that allows you to sell variable insurance. So here are 4 factors to consider when evaluating your risk tolerance level. Investment objectives, investment time horizon, reliance upon the invested funds, and inherent personality. Why risk tolerance matters. Once you know your risk tolerance, you can use that to inform your investing decisions. Investments should be chosen based on your objectives, needs, time horizon, and tolerance for market changes. Remember, your risk tolerance is personal. It's important to make decisions that are right for you, not a friend, family member, or a social media influencer, even if you trust their advice. If you're working with a financial professional, clearly communicate your risk tolerance to them. So, Wall Street Trapper. Yeah, man, we're going to go jump off the porch. Your local buddy who charges you $10 to get in his Facebook group so you can invest in QQQ. The guy who, the problem with that is his risk tolerance ain't your risk tolerance. There's a term, what you eat don't make me shit. Well, there you go. Oh, wow. Hold on. I'm not even sharing the risk tolerance screen. Hold on. Let's present the risk tolerance screen. I didn't notice it popped up in so here we go. Know your risk tolerance, right? So here are the 4 factors to evaluate when evaluating your risk tolerance level. Investment objectives. What are your objectives for this account? Investments that have the potential for significant growth also come with a higher risk of significant losses. On the other hand, If your objective is preservation of capital or protecting the assets in your portfolio, you might choose investments that involve lower risk, but that also might not result in the growth or income you require. Your investment objective should reflect your needs and desired outcome, as well as the risk you're willing and able to take to meet your goal. Investment time horizon. If you're looking at a long-term investment, for example, if you're in your 20s and planning for retirement, you can probably afford to take on more risk. You have decades to make up for losses your account might sustain. If your timeline is short, however, you likely don't want to risk your account value seeing a significant decrease just as it's time for you to withdraw. You might want to consider the liquidity of your investments in tandem with when you expect to need the funds. And this ain't SIE bullshit. This is FINRA. Because SIE don't even teach you this stuff. What teaches you this stuff is actually being a financial advisor for over 15 years. Reliance upon the invested funds. Are you counting on this money to provide you with essential funds either now or in the future? For example, is this the main source of money for a home down payment or your child's college education? Or is this disposable income that won't really impact your lifestyle if you take losses? When assessing whether this really is money you can truly afford to lose, consider your financial circumstances and needs. Not only what you earn and your overall net worth, but also your short and long-term spending requirements. This might include routine expenses like food, housing, transportation, utilities, and childcare, periodic or emergency expenses, home or car repair, medical care, and or potential long-term expenses like buying a car, buying a house, paying for a college, paying for long-term care. Ironically enough, a lot of this can be mitigated through a life insurance policy, but let those investment guys tell you, like I showed you here earlier, FINRA recommends mitigating your risk by getting insurance products. And you got a lot of CFPs who are, I mean, we get term insurance. Yeah, you get term insurance solely for the death benefit. But you get permanent insurance for what you can use it for. So, as you assess how to best generate the returns needed to meet your goals, keep in mind how dependent you are on these funds, in addition to where you are in your investment timeline, and choose your investments and investment strategy accordingly. Inherent personality. You probably have some ideas as to whether you're generally a cautious person or more of a risk taker. The amount of risk you can technically afford to take isn't necessarily the same as the amount of risk you're comfortable taking on. You don't want this to outweigh your logic in your investment decisions. Hold on. My buddy Diamond Dave is going live. He's a day trader, right? And I'm going to continue. Oh, shit. Why did my screen share stop? I'm going to continue sharing what I'm sharing because he's a day trader. He has no disrespect to him, but he does day trading, and he had the nerve to ask, well, why would a person like me get a permanent life insurance policy as opposed to term? Now, one thing he did say that I agree with is that a lot of these term insurance pushers will push term insurance on younger people, and he disagrees with that. He thinks that while you're younger, you should get permanent life insurance, but as you get older and get more responsibilities, term insurance is probably the way to go. And I think he and I kind of agree on that. But I personally have an affinity for permanent insurance. But inherent personality, right? So the amount of risk you can technically afford to take isn't necessarily the amount of risk that you're comfortable taking. You don't want this to outweigh logic in your investment decisions, but it's something to consider. The idea of losing money makes you squeamish. You probably don't want to pick the highest risk investments. You might be more likely to back out early if you face volatility, which could also mean missing out on the potential profits. Now, Whoa, what just happened here? Okay, here we go. Why risk tolerance matters, right? So, once you know your risk tolerance, you can use that to inform your investing decisions. Investments should be chosen based on your objectives, needs, time horizon, and tolerance for market changes. Again, I keep hearing these people talk about buy term, invest the rest. I don't hear them talking about your needs, your time horizon, your risk tolerance, your exit strategy. Remember, your risk tolerance is important. Is personal. So it is important to make decisions that are right for you, not for a friend, a family member, or a social media influencer, even if you trust their advice. If you're working with a financial professional, clearly communicate your risk tolerance to them. Now, pause really quick because I want to share Diamond Dave's channel. And this is not a slight to him because he is a social media influencer, right? But what does he use his social media for? He does not use his social media as business. He uses it for business. Let's see what he's talking about here.
The benefit, you can really set yourself up for 2025 if you start looking at what you're getting ready to do right now, right? As opposed to wait until 2025. And I understand people can be stressed, but it's a really, stressful time of the year for a lot of people because of everything that's going on. But if you can maybe carve away a little bit of time to really start thinking about what you want your 2025 to look like before 2025, it could put you in a position to be successful. So that's something that we're going to talk about with Erica because there's been a political change. There's been an administrative change. Some things are going to stay the same, but also some things are going to change. And I want to try to help you adjust to that change and put yourself in a position to make money. This has been a really good trading week for a lot of people because of the way in which the market is run. And one of the things I try to tell you is that as a trader, I just want the market to go in a direction. I don't care if it goes up or down. Just give me a direction to trade. And I can always trade the direction, right? And that's what we've seen pretty much the past 2 to 3 days is really, really strong direction. We got FOMC coming out.
All right, so we're going to stop listening to him for now, and we're going to get back to what we were doing. Right? Let's go back to here, knowing your risk tolerance. And then I'm going to chop this up into a couple of different pieces. Right? Because this is investing basics. Right? So even if you feel comfortable taking on a significant amount of risk, you should be thoughtful about your investment decisions and how they fit in with your financial profile. Being willing and able to take on a certain amount of risks are two different things. Make sure you're willing to take, make sure the risk you're willing to take is consistent with the level of risk you're actually able to take. Never invest in an investment product you don't fully understand, including what risks are involved. And be aware that guaranteed investment returns, which they can't do, high pressure sales tactics, and promise of low risk can be hallmarks of investment fraud. Though it doesn't ensure a profit or guarantee against loss, diversifying your portfolio is a smart strategy to manage your risk exposure, no matter what your risk tolerance is. To diversify your portfolio, you'll want to select investment products from different asset classes, like stocks and bonds, as well as different types of investments within those classes. Stocks of companies from different sizes, industries, or broad-based index funds. Then you'll want to make sure that your portfolio evolves along with your circumstances. Check in with your assets and yourself periodically to confirm whether the two are still aligned. You'll likely want to rebalance your portfolio and adjust your strategy over time. While there's no such thing as a risk-free investment, paying attention to your risk tolerance can help you make investment decisions based on the risk level that is right for you. So let's go back to investing basics, right? So we took a look at risks. Well, let's take a look at fees and commissions, because this is something that, people, well, what about the fees and insurance? What about the fees and investing? So when you buy or sell stocks, bonds, and other investment products, there are costs associated with doing so. These costs can vary based on the type of account you have, the investment services you're signed up for, and the types of products in which you're investing. But some sort of fee or commission is almost certainly guaranteed. So when people are like, oh, I'm trading in Fidelity and there's no fee. Yes, there is. You just don't realize it. But there's a fee, sir. There is a fee. Because there's a fee associated with everything. No such thing as free lunch. A small percentage difference in fees can eat away a big chunk of your overall investment returns over time. The SEC, Securities and Exchange Commission, illustrates just how big a bite a fee of only 1% per year for 20 years on a $100,000 investment earning 4% really is. $28,000. Learn more in this investing course. Your main squeeze, fees and commissions. I'm going to start doing, I'm going to do investment stuff for a while. So, costs generally fall into 3 buckets. Transaction costs. These are costs that are associated with buying and selling securities, which you are charged when you make a transaction. Transaction fees include commissions, which are charged to compensate an investment professional for buying and selling stocks and other securities. Markups or spreads, when an investment professional sells you securities that the firm has in its inventory. So this is what you pay when you buy from Robinhood, Cash App, Acorn, all that. You're paying the spread or the markup. Sales load charges. So when you buy a mutual fund from Primerica, they have a 5% load fee. So when they tell you to put $25 a month, if they're charging you 5% of a load fee that's front end, you're only actually putting $20 a month in that mutual fund. So sales loads are charged when you purchase or sell mutual funds. Learn more about mutual fund sales loads. Surrender charges when you make an early withdrawal from a variable annuity. It doesn't just have to be a variable annuity. This is the fees that people are talking about when they're telling you to buy term and invest the rest. When they say, well, what about the fees? It's called a surrender charge. If you should surrender that fixed product like life insurance, whole life insurance, index universal life insurance prematurely, you're going to get charged a surrender fee. Right? Why am I telling you this stuff? Because you need to know it. Why do you need to know it? Because all too often there are people online who are selling you wolf cookies. And I, for one, am tired of it. Because when I sit down and talk to people and I start telling them this, that, and the third, wow, I've never heard this before. All right, so place the fucking business with me. Or I'm just going to start charging people up front to sit down with me. And my fee has now gone up. Because I've had too many people waste my time. But if I were to tell you to buy slap a Bitcoin, you'd be knocking on my door. So there are advisory fees, also called client fees. These may come in the form of a fee charged for advice or portfolio management. So that's what I'm charging is advisory fees. These costs can vary depending on the type of service provided. An advisory fee may also be charged based on the size of your portfolio, referred to as an AUM or asset-based fee. AUM meaning assets under management. These fees are generally assessed regardless of whether you buy or sell securities in the portfolio. While the overall cost may be less with a smaller portfolio, if you trade often, the amount paid may be greater for a larger portfolio that trades less frequently. But yeah, because 1% of 100,000 is a lot less than 1% of 1 million. Ongoing expenses. These are costs that you incur regularly, such as an annual operating expense or fees associated with operating and administrating your 401k account and other miscellaneous fees. Mutual funds and ETFs have annual operating expenses to cover the professional management and marketing of the funds, and they may charge different amounts to different share classes. Investors can use FINRA's Fund Analyzer to analyze and compare the cost of owning different funds. What's going on, bro? I have the link in the chat if you want to come up. I'm broke genius. I kind of started falling along the way of what you have done, and you got tired of seeing all this bullshit online. So you said, if I'm gonna see some bullshit, I might as well talk it myself. So I'm not talking no bullshit. I'm talking some real shit here, because this is all those, like I said, I just went over day trading, right? And you and I had that conversation. You were like, yeah, you might make a couple dollars, but realistically, if you're day trading, you're not making money unless there's a couple more zeros behind that comma. Say less, right? So some brokerage firms, typically online or so-called discount brokerage firms, offer free trades or zero commission trading, similar to doorbuster sales and other marketing strategies. Free trading is a way to attract customers, but free trading does not mean free investing. Brokerage firms or brokerage accounts offering free trading often level charges and make money in other ways, such as through interest income from margin loans, robo-advisory service fees, commissions on options, or other types of securities, and more. So you need to be a smart consumer. As with any significant purchase, it pays to ask questions and shop around before you choose an investment professional. It pays to ask and check. If you're working with an investment professional, don't be shy about asking how they're paid commission. Assets, how they are paid. Are they paid commission? Are they paid by assets under management? Some are both, right? Like me, I get paid commission and I charge you a fee. I had to start doing that because I had too many people who came and sat down with me and wasted my fucking time and took all this information, and then they're not going to do anything with it. I wrote down a bunch of notes. Guess what? If I want to be a great football player, I can read every book from every guy who's the greatest football player in the world. Is that going to make me a great football player? I can take notes. Yeah, you got to cut left when this guy comes. You got to go straight up the gut. It's not going to make me a great football player. You know what's going to make me a great football player? The actual practice of playing football. So me, as the actual practice of a financial advisor, I'm great at it. But you taking a shit ton of notes are never going to be great at it. Because you can read all the books you want, but you're never going to get there. Genius, what's going on, bro?
What's going on, bro?
Doing
You
all
could
right.
continue on. I was about to fire up a lie myself, man, because I had the same sentiments, the usual bullshit.
Yeah.
So yeah, go ahead. I'm just listening.
No problem. Now, again, I wanna bring this caveat, right? Because what I'm saying, like, for example, if you are doing trading in a cash account, which FINRA says that is restricted and that they don't allow it, listen, number one, you'll hear financial professionals like myself tell you, you need a license to day trade. No, you don't. Right? And that's why I threw myself in there, because I don't like people not being licensed doing what the fuck I'm doing. Just like people will tell you, you don't need a real estate license to do fix and flip. You don't. However, the licensure is going to allow you a few different things. Number one, it's going to allow you access to shit that the average person ain't got. That's really one of the things that the license has. Number two, the license is going to allow you to take other people's money. But let me finish this up really quick. So also ask what it costs to purchase, maintain, and sell investments. Even if you're working with a financial professional, there may be a different fee structure depending on whether you use a broker to make a trade or if you do it yourself online. Fee and expense information will also be online or can be mailed to you. Fees and commissions must be disclosed by all brokerage firms, including oh shit, you just dropped a video or you going live? Genius. Did he Oh. All right, yeah, nice. Something just popped up from you about the Young Thug thing. So fees and commissions must be disclosed by all brokerage firms, including online and app-based brokerage firms. Firms must provide a Form CRS to investors, which has a section that summarizes principal fees to new customers at the earliest of several triggers, one of which is the opening of a brokerage account. Firms must also make more comprehensive fee information available, usually handled with a hyperlink to a more detailed fee schedule. Review and understand all costs associated with opening and maintaining an account, as well as trading and other fees. So yes, there are fees and such associated with this stuff. So like I said, even those, oh, we do, no fee trades. Yeah, I take that with a grain of salt. Right? I'm gonna do more series on this, so I'm kind of skipping around. One more thing I want to, what is, because all these people never talk about prospectus. Blockchain. All right, I'm not gonna find it there. Let's go to Google. What is a prospectus? So when people are always online telling you to buy term insurance and invest the difference and how come they never ever tell you about a prospectus, right? They never tell you, and then you'll have hedge funds which never tell you about a red herring. We're going to get into that as well. So Investopedia, Missouri Secretary of State, Merriam-Webster, Wichita State. Okay. Corporate Finance Institute. Let's look at them. All right. What is a prospectus? A prospectus is a legal disclosure document that provides information about an investment offering to the public. And you know what? Let's just let Google tell us. Right? Because this is actually fairly detailed here. So it provides potential information about an investment offering or a business and is used to attract and inform potential investors, members, or buyers. Investment offerings. A prospectus is a legal document that provides details about an investment offering, such as stocks, bonds, or mutual funds. It is required to be filed with the Securities and Exchange Commission or local state regulators. Investors use prospectuses to make informed decisions about investments, such as whether or not to participate in an offering. How many, so Genius, if you are able to, can you come off mute? How many times have you heard people who talk about investing mention a prospectus?
None. Not even, I don't even, I just learned what that was. I have to admit. I kind of figured a little bit. I've definitely seen that word, I think you usually see that on companies' websites. They have a prospectus on, and it's kind of like, it seems to me it's similar to a newsletter of what the business offerings or something is, but this is more investment related. But yeah, I'm you speaking my language, man. You I mean, this is what I do best, man. I just take a dollar, try to turn it into two. The hard thing is to turn it into $1 million, to scale up, take 1,000 into $1 million. Like that's the ultimate investor. Some people say hustler. I like the term hustler because some people might think of it as a derogatory term, but nah. You got legal hustlers, you got illegal hustlers. I mean, some people say, it's still a hustle no matter what, but some people have done that. I've definitely took $100 and turned it into 1,000 before, plenty of times. But you know, I'm trying to turn the 10,000 into 100,000 right now, but technically it's not 10,000 because
Listen,
I had to fix my
fuck with
house
your
up.
boy, man. We gonna you keep
Yeah.
doing what you're doing because you're doing what you're doing. Hold up, where's the book? I got it right here.
Oh yeah, man, appreciate it, man.
Hold
Oh
up,
man, that's what's up.
let
I
me.
wish I had my sound effects.
Yeah.
Man.
Y'all see this right here, the Millionaire Savings Plan. This was a book written by this brother, right? And it's really so when I talk, I talk on a certain level. I talk basically I talk some high level shit that most of the people watching me probably feel as if they can't get into because I talk big money. Yeah, I do. I use big numbers. And I do that for a reason. Because I want the big number people, right? But there's a saying that we have on Wall Street. There's more blue-collar millionaires than white-collar millionaires. There's more millionaires in overalls and construction boots than in fancy cars wearing flashy suits.
Oh man, you like man, you gotta. I mean, houses are the most expensive for the average person investment you'll make in your life. That's what they say, and it is true for most people.
Mm-hmm.
So imagine someone that knows HVAC, plumbing, electrical. You know, it's some guys I met, they know all of that. They know everything. It's one dude that he's older, but he pretty much, it's not really much that he doesn't really do. He does electrical, plumbing, HVAC.
Keep going, I'll be right back.
Yeah. It's like basically imagine you know actually how to fix a house up. The same house that most people is one of their biggest investments that they're going to make in life. You actually know the inner workings of how to build a house, how to rebuild a house that needs renovation. I mean, basically, that's where the money is. So I think they say a lot of the millennials and even Gen Zers are really heavy into the trades because they just want to do something that doesn't necessarily bog them down in student loan debt, obligations. You get more freedom as far as, after you work in the field doing whatever you're doing, whether it be plumbing or being a carpenter or electrician. You could go out and hang out. You don't have to worry about taking any college exams or studying for any exams. You can just get right to work. So a lot of Gen Zers are doing blue collar, related jobs and even tradesmen jobs related to construction. I see them all the time. I see them every day. I see young guys with cargo vans, with vans, with tools, different companies, whether it be landscaping or plumbing or HVAC. HVAC is big in Midwest and in the Northeast, wherever it's cold. Yeah, wherever it's cold climates, man. They people they need their furnace tune up. Might need a new furnace, new duct work. It's huge. It's really not talked about, and I don't know why it's not talked. Well, it's certain people that are into it, and it's a space for everything. But if you don't tap into it, the algorithm won't pick it up. But I always look for handyman videos, so I see all of these guys, man, doing all kind of work. I go hop on my Instagram. It's none but investors, none but real estate investors. Whether it be real estate investors that just basically just financially take care of everything and manage everything, and there's some guys that I follow that they kind of like myself. They have a construction or handyman background, and they also real estate invest. So that's a sharp sword if you have knowledge about construction and you're an investor, because you can GC your own project. You can bring the people on. You can shit test them. You know if they're good by the quality of their work. You can see. You know the game, so you can just go hit the ground running with actually getting the tradesmen in, making sure they know what to do. They can't come to you on some, oh, I can't do this or I can't, because you already know. You've done it before, if you paid somebody to do it before, or you done it, you done it yourself before. So you can't fool them. So whereas like a regular person that doesn't know how to hammer a nail, they can run circles around those guys. So 90%, I believe 90% of millionaires are into real estate, some form of fashion.
Most people are.
Yeah.
Because,
Okay.
and I'll use the Black community when I use this phrase, but it's usually middle to low income Americans who don't understand. And they take the term and they say, well, home ownership, or they'll say real estate, but they'll say home ownership is the fastest way to generational wealth. And that statement is completely untrue. Home ownership ain't gonna get you shit but ownership of a home. Real estate can be, but what they mean by that is property ownership, right?
Mm-hmm.
So when I was doing real estate in New York City, I used to always get my clients, and my real estate brokerage was in the hood. All right.
Okay. Yeah.
We was in East New York, right?
Mm-hmm.
And East New York is the hood.
Okay.
And
Is that the Bronx or Brooklyn? Or?
That's Brooklyn.
Okay.
But East New York, Brooklyn is the hood.
Okay.
And then you got like Canarsie. So East New York, Brooklyn, you're familiar with people like Uncle Murder.
Yeah. Uh-huh.
Right?
Yeah.
And then you got like East New York to Canarsie. And then Canarsie, you're familiar with GS9.
No, I'm not familiar with them.
Bobby Schmurder.
Oh yeah. Okay. Yeah.
That's GS9 and that whole gang.
Yeah.
But so what I would do with my clients, I would say, listen, this is your first home. You're 35 years old, bro. You don't need to fucking have your forever home right now. So I'm not sure how it is in the Midwest, but in the Northeast, we have a lot of properties who Most Hated was good, bro. In the Northeast, we have a lot of properties that have a basement, right?
It's like that in the Midwest. Midwest is primarily basement houses. If you got a flat raised ranch, maybe like a little small house, like starter home, it might not have a basement. It'll just be like one, they call those shotgun houses in the South. Most of the houses in like Florida don't have any basement. Other parts of the country might be like that as well. But one state I do know is Florida, because actually what people possibly don't know about Florida is literally on top of the Atlantic Ocean.
Yeah.
It's crazy. They built on top of the Atlantic Ocean. So they can't have no basement. You know what I'm saying? You dig a basement, you might be Finding Nemo in them. You know what I'm saying? So they can't have gas appliances as well in certain parts of Florida. Yeah, they got to use electric. Yeah, Florida is like a vacation. It was built to be like some type of vacation paradise.
Yeah,
it wasn't. Yeah, so that's why a lot of people retire. Your boy from Illinois, King Griffin. King Griffin. Yeah, he's I think he's from Ohio, but he made his money in Chicago, and he went to Miami to hang out and live there. He moved there from Chicago. Got tired of Chicago's bullshit and went to Florida and Miami.
My brother lives in Miami. He probably lives near where someone like Ken Griffey would live. So you got Miami-Dade 305, which most of the hood knows about. But then you've got South Beach, which most everybody knows about. But then you've also got Coral Gables, which is a higher income area, middle income area.
Mm.
And then you've got Key Biscayne.
Some rapper was talking about Biscayne. I can't think of it. It'll come to me. Yeah, but
Key Biscayne is where the money at. That's like Miami's Manhattan.
Mm.
All right. So he might have been getting revenge, babe. That's yeah. In Phoenix school, I'm like, what you went? That's messed up. My cats are I gotta keep them locked up from each other because they fighting viciously right now.
Are they both the same sex or are they different? Oh yeah. It's a I had a female cat. She was a mid-sized kitten, but she was just too much to deal with. She was urinating all over the place. But I mean, I wish I tried everything I could to keep her. I mean, she was like Bassett. She was dark black cat. If anybody know about ancient Egypt, they already know about Bassett. But yeah, I tried to keep her, but she just was pissing on everything. She was just some animals just too wild. They need to be either outside or they gotta go somewhere else. And it might have been it could have been a lot of things, but I mean, she was a good hunter, man. She was,
yeah. Man. You know what? I found female cats hunt a lot more than male cats.
Oh yeah, that's like the lions too. Yeah. That's like their lion cousins, or the females do most of the hunting.
Because I had a female cat named Tigress when I lived in the burbs, and I had a male cat named Vladimir, all black, and then I had a smoky gray tiger stripe, black and gray and white female cat named Tigress. And every day I used to come and find either a chipmunk or a bird with its head gone sitting on my front porch.
Yeah.
And I'd be like, damn. And Vladimir would like, they were indoor outdoor cats, so we kept them in the garage, and then they could leave as they please. Vladimir was always in the house. Right. Tigress was out being a hoe. Now let me say.
Yeah, they getting the heat. But yeah, I had my other cat that I had. He's about 2 years old now. He impregnated her, but it was just too much going on. It just wasn't a healthy environment, I think, and it's just a lot of shit going on. So she ended up having a stillborn baby, but yeah, I'll probably once I get things settled, I'll probably give me another cat, another female. Yeah. I want to this chick that I don't know her, but I follow online. She got one of those Bengal cats, kind of expensive joints, and it went outside. She never saw that cat again.
Yeah, no, you ain't gonna see that shit again.
that cat in one of them houses in whatever subdivision she was living in or wherever.
Big facts.
Just inside, and it ain't coming out.
Yeah, nah, she ain't getting that cat back.
Yeah, so I think she getting another one of those. Cause see, a lot of people don't know about cats too. Like you can make a lot of money off cats because it's a lot of rare breeds of cats that you can breed, and you could probably make more money than dogs, man. In a sense where you got like Russian blues, Bengal cats, you got Persians, you got Maine Coons.
Yeah.
Those are like rare breeds that like all of those cats, man, are expensive cats if you look them up. And if you could breed them jokers, man, you could write your own ticket, man. Cause like,
Yeah.
I mean, you sell a pit bull, okay, yeah, it might give a couple hundred, 500, you know what I'm saying? You sell a couple kittens, some Russian blues, man, them joints go for like, I think like a couple grand a pop or something like that. Man, it's, if you get papers, I mean, it's different stuff that is involved with that. But yeah, cats, man, a lot of people don't know. A lot of people sleep on cats, man. Yeah.
That's good. And we let's be honest, a lot of hood folks who sleep on cats because they want the dog so they could take it outside and feel threatening.
Oh,
Listen,
yeah.
man,
Yeah.
cats is where it's at. You know what? Actually, I can't even say that because I see a lot of hood dudes who fucks with cats over dogs.
Yeah, cats be in the hood, man. I'm in Gary, man. It's cats all over the place, man.
Yeah.
I got a cat outside. It's an orange cat. I feed him every now and again. I wouldn't let him in because he's another male.
Yeah.
And even though my cat, he's really intrigued. He's very social. You get male cats. Usually they'll fight each other. They're territorial. It's like dudes. You can't. You know what I'm saying? And you just, one day it's just, hey man, you too close to my bowl. Get back. They territorial. But the funny thing though is my girl cat. She was the boss. She ate first. Everything. My boy cat. He just let her do what he was forced to be a simp. Like he had no other choice. He had no other choice in that regard. Like it just came to him.
Now, you know what? I had to get these two separate everything. Like I had to get them separate bowls, separate water, separate litter boxes because bro. And it's crazy because so my orange tabby, he's 2 years old, but this other one, he's like 8 months old, right? And I swear to goodness, it's like I got Garfield and Normal. You know the little gray and black cat that was on Garfield?
Yeah.
So my oldest cat is the orange tabby, and then the baby is like Normal. But yo, he be bullying the fuck out of my orange tabby. But I realized I ain't get him fixed yet.
Oh yeah. Yeah.
So he's still got his nuts. You know what I'm saying? So yo, I swear to God, I let these two out. It's on sight. My big cat, he just be chilling, but it's on sight. That little nigga see him, he be, yo, what up, son? He run up, start pulling. I'll be like, yo, damn, son. It's crazy. But so your analysis on the prospectus is very accurate and it's very close. However, what most people don't know is that you are required to receive a prospectus before you give me $1 for that investment.
Oh, okay. I didn't know that.
Yeah, of course you didn't. Why would I tell you that? I don't want you to know you need it. Obviously, I don't care. But, I'm putting myself in the feet of many of these financial quote unquote gurus or even these financial advisors who are online.
Yeah, what separates you is what was quite interesting with you that's very underrated is that you actually have been a licensed professional in both real estate, or even if you wasn't in investment size or stocks, a stockbroker, you work for a company as a stockbroker. I have never been a licensed real estate agent. I took the actual class a couple times. I took one for field for sales, real estate sales agent, and then second I took the brokers, but I never took the exam. Never finished the exam or anything.
You took the class.
I applied for quite a few investment jobs. Never got one. I kind of thought it was like I wasn't kind of didn't fit in the good old boys club. I might have been wasn't the type of person that will let a lot of nigger jokes pass. Pause. So I don't know. But the thing is that you have actually been a working professional in both of those disciplines. That's pretty credible. I mean, like, you know what I'm saying? Like, I mean, I know, now you're insurance, so you really cover the main three investment arms in America and actually the world: real estate, investing, insurance. You got the triple crown, basically, as far as you've been a working professional in all three disciplines or actual sectors. Yeah. So yeah, it's man, you know what I'm saying? Like,
well, thank you.
Yeah, I mean but you're an underdog like me, because a lot of people don't really value underdogs,
Right.
But the thing is that underdogs win eventually. It's just a matter of time. Just keep up consistency, it'll get there. But yeah, I was just gonna say that. That's all.
I appreciate that.
Yeah.
But so why would someone who is in my position want you to know that before you're gonna give me $1, you're supposed to have and sign the prospectus? So how has my industry circumvented that? Why do you think? I don't know if you got here when I was reading from FINRA. We just send you a hyperlink.
Okay.
And now you sign everything. Yeah, I agree to the terms and conditions. Yeah, I read that. We know you didn't read none of that shit.
Mm-hmm.
But now if you turn around and try to sue, hey, Mr. Genius, you signed saying that you understood the risks and volatility of what was involved with this. Alonzo didn't scam you. Right? But I kind of did, because I was just like, yeah, no, just give me the money here or sign this. You're going to get 10%.
Yeah.
Right? So then again, you can get one from a business or a research. And so here's some of the information that's going to be in the prospectus. Like you said, it's going to be information on the company, the background of the company, board of directors, and other important milestones. Why is that type of stuff? Why would the average person really care about that when it comes to their investment? Because part of your investment is personal, right? So maybe I don't like Jay-Z, so I don't want to invest in Tidal because Jay-Z is part of the board of directors. He's also the CEO, but you get the picture, right? So maybe I don't want to invest in Tidal because not only is Jay-Z part of the board of directors, but Dame Dash and Kanye West are. And to me, these are all hood dudes and quote unquote street hustlers. And I don't want to invest in a company that's full of street hustlers. And then I look at the background of the company, and it was formed by, Nicky Barnes. Well, I don't think I like this company. They're not ethical. Or maybe, shit, you know what? That's my type of people. I definitely want to invest in this company. See what I'm saying? It'll tell you about the management team.
Yeah.
So this will be the people who you were saying something?
Yeah, I was going to say something, so one of the things that I know about, well, that made me think about that with the like kind of investing in hood dudes. It's like, I was like, why is Underground Fantasy investing, hundreds of millions of dollars into Gilly the Kid and Wallow and $1 million worth of game, and then Cam and Mace with it is what it is.
Yeah.
Or I think it's
it is what it is.
Yeah. So I was like, at first I was like, what are they doing that for? And then now, like probably a year later, I realize why they are why they did that, because basically those two podcasts reach a different audience and a wider audience than other podcasts, and you want that audience. You know, a lot of people are actually, to be honest, a lot of people talk about the hood. Um, it's a lot of hoods. Quote unquote. You even have you have non-black hoods. Like
Yeah.
if you go to Mississippi, and also even hell, really, to be honest, any state, there's non-black, quote unquote, finger quotes, ghettos,
Right.
places where poor people live and they're struggling, and you can see signs of quote unquote poverty and stuff like that. So the thing is that um it's also a lot of money in the hood. Okay, if it wasn't, the Arabs and Indians and Koreans and Chinese wouldn't have businesses in the hood if it was just so destitute.
Right.
And not only do these people make money in the hood, um, they make a lot of money because they don't really have any competition. Really, that's one of the reasons. So yeah, it made sense, after I saw kind of what was the reason behind that investment. But yeah, I just wanted to point that out.
No, yeah. You're absolutely right in that. And with you mentioning that, so I'm gonna read these last couple off real quick, and then I want to show you something because it piggybacks off of what you were saying. So management team, this is actually the people who manage the everyday operations of the company. Financial performance, metrics like revenue, cash flow, and income. Risks and regulations. So this is information about the risks and regulations associated with the investments. So use of proceeds is what's going to happen to the money that you invest. What are they getting it for? What do they need you? Because people don't understand the reason companies go public is to get more money in so they can do different things. Market forecast. So that's information about, they say, the competitive landscape, meaning, for example, Pepsi just fired 500 people. What does that mean for them versus Coke versus Royal Cola? And then subscription agreement is an example agreement for the buyer. But what I wanted to show really quick, because you had mentioned the investment in basically black folks, right? So here's something that I got, because I know I was telling folks about my whole signing paperwork with Prudential and LPL Financial. Are you familiar with LPL Financial? So
No, I'm not. I'm
right.
not.
So LPL Financial is one of the largest money management firms on the planet, right? One of the largest independent money management firms. So my principal, Charles, of the firm that I belong to, CG Wealth Solutions, might have caught when that I signed some paperwork with a Prudential firm out here, right? So we got invited today to be at the J Suites in Grand Central, which obviously I'm not there. It's almost over now at 2:00, right? But this is a unique chance to learn how you can position yourself as a champion of financial security within the Black community. What the fuck do you think I've been doing for the last 15 years? But now these companies have the nerve to actually be doing this, right? So for financial professionals only, for an inspiring event focused on the blueprint for Black wealth, Prudential's initiative aimed at fostering financial security and generational wealth for Black Americans. Now, let me tell you something about Prudential that you probably don't know. You know, Prudential is the reason that life insurance costs more for Black people.
No, I didn't know that.
Let me explain to you what happened. And then it sounds like you might be about to drop a comment. So what happened was, back when we got emancipated from slavery, life insurance and hair care were the two largest industries that made millionaires in the black community. Hair care because we could still cater to the rich white people, and life insurance because we believed in the power of generational wealth through life insurance. So we created a bunch of black millionaires, such as Alonzo Herndon, who bought life insurance companies. Well, the president and CEO of Prudential at that time said, nope, we're going to make it hard for these Negroes to make money. So we're going to get, based on mortality tables, black rates. So it meant that because black people had a higher propensity to die at certain ages than whites or others, we were more risky to insure. So they charged more for our life insurance premiums. Guess what year that law got abolished?
I'm not sure. You want me to
October
guess?
2023.
Oh wow. I was literally on live stream talking about my, problems as far as like getting insured because of past health, occurrences or whatever. And it was probably because that was just last year. I was talking about this years ago. And I'm not saying that I had something to do with that, but I definitely thought like, damn, because I found myself in a situation where it seemed like the insurance, the ability to get insurance was kind of difficult, just like it kind of is to get certain things, I know some people don't believe in racism. It's like they look at it like it's a ghost and it does not exist. But I mean, come on, it's, some things are how they are, but yeah, I didn't know the actual story behind it. I just thought like, damn, this is something definitely conspiratory and something that is something that I know is a kind of a tool for oppression or discrimination, but I just called it just like it is that, but I didn't have any reference behind it. But yeah, it's not surprised, man. To be honest,
higher rates since till last year, bro.
Yeah.
Damn near literally 1 year ago.
Yeah.
Right, we're 1 year and 1 month ago.
Right. So it's the insurance thing that you said though. I don't want to glance over that. The amount of black insurance companies that were started, and then the hair care industry, black people making money off the hair care industry. I do know of a guy from Chicago. His name was SB Fuller. He made money selling door to door in the 40s, 50s, and 60s. And he became a millionaire in Chicago by going door to door selling hair care products primarily, and other health and wellness products in the black community. I wouldn't have made the money. I wouldn't have survived in business. I wouldn't have survived. My business, my store, my computer store was in the hood, quote unquote, in Chicago on 79th Street, East 79th, between
God
college.
damn, this man made $18 million in sales. I'm sorry.
Yeah. So that's a lot of money. That's 19, pre-1960s money.
So in $60, bro, that dude was fucking taking it.
Yeah. He was extremely wealthy. He was probably one of the most wealthiest men in America at that time, as far as black men. He was probably the Robert Johnson or Robert Smith of his time, because he found a way, like door-to-door sales. I used to do door-to-door sales too. I used to go knock on doors. It's an effective marketing strategy. It's an old marketing strategy, but effective. A lot of people don't like you doing it, but if you're bold, fortune favors the bold. If you able to do it, it is an effective way for marketing as well as sales. It kind of deals with both. So he used that tool to sell his products, and of course, word travels fast. He more sales, more money, more people buy your products. But yeah, I don't, yeah, I guess I got to tell the end of the story. The end of the story is that unfortunately, he faced some discrimination from his own people, and they basically stopped buying his products, basically boycotted him, and he ended up dying basically kind of in a lower kind of I don't want to say broke, but he ended up dying kind of misfortunately. I'll just say as far as his fortune, a lot of his fortune was lost because of that boycott. I forgot why they boycotted him, but the thing is he made a lot of money. I wish he was more diversified so he didn't necessarily because you could diversify your investments to where it doesn't matter really too much as long as the government doesn't come after you. Like
Oh shit!
you could be all right. You'll be all right.
So you
Yeah.
see this here, National Negro Business League,
Yes.
and he was a black Republican,
Yeah.
right? So Booker T. Washington, shout out to Rael. He had been doing a series on Booker T. Washington in the National Negro Business League.
Yeah.
Right? And I was live yesterday, and there was something that both he and I were pissed off about. Right? And this came about black men. Because again, I'm not gonna go through that whole calling out name shit like I did the other day, but there's dudes on here who are talking certain stuff, right?
Mm-hmm.
And let's be honest, okay, whether you were for him or against him, Trump won. Now what?
Mm-hmm.
Because if all you were looking for was for Trump to win, he won, you busted your nut. Do you have post nut clarity? Or you're not, you know what I'm saying? Or are you really in this relationship?
Man,
You see
it
what I'm
don't
saying?
matter. It don't matter if Kamala won or Trump won. I'm more or less glad that probably Trump won, because I think if you see the after effects of what happened after the election, kind of tells you what was involved. But I ain't gonna go into that. But the thing is that no matter who won, you got to make some bread. You got to make some money. You gotta do that, like, no matter what. So the people that voted for Trump or voted for Kamala, they still have to show up to work the next day.
The next day, exactly.
Yeah.
Right? It wasn't like, oh, Trump won, now we can ascend to the heavens.
No.
No, that didn't happen. Right? So I want to look up one more person that now that we mention it, right?
Mm-hmm.
It's ironic he shares the same initials as me, right?
Oh yeah.
But let's see, right?
Mm-hmm.
So he was born 1858 and died in 1927.
Mm-hmm.
He died the richest black man in Atlanta.
Mm-hmm.
So him and his partner started North Carolina Mutual, which if I go to North Carolina Mutual, they are in rehab. Or no, they're not even in rehab now. They're going broke.
Mm-hmm.
Right? They didn't get the support. But if I go to Atlanta Life Insurance, damn, I can't spell today.
That's what my grandfather used to work for. That's
Atlanta Life?
Yes, sir.
Oh,
he was one of their top salesmen in the country. He used to go to seminars down in Atlanta, do speeches for Atlanta Life. Yeah, he was a manager at a Chicago office. He was cold with insurance. He used to come home and get on his phone, schedule appointments, old school. Like he was social. He'd go to the bar and he would talk
That's
to
what I need to
people
start doing.
and sell them insurance. Yeah, I told you that 2 years some years ago. I said
some years ago.
my grandfather. That's how he used to get. And he knew a lot of people though. Like he knew my grandfather knew a lot of VIP, a lot of black elites. You know, he knew Jesse Jackson personally. He knew Roland Burrs. That was one of his best friends. So he knew some, people knew him. He had a reputation. So that did help. I ain't gonna say.
Trust me, the sales of insurance is what helped him know them people.
No, he knew them before he had a business. Before he even had his businesses, he worked with Roland. Before Roland was into politics, he worked for a bank. He worked for a now defunct bank. What was that bank that my grandfather worked at? He said, I forgot, but yeah, he worked with a bank with Roland Burrs downtown. I forgot the name of it.
That's all right.
But yeah, he knew him before he got into politics and everything. And Roland, to be honest, Roland right now, his son has a plumbing company. Ironically,
he gonna be
that's in the Chicagoland area. Yeah, he's Roland. I think it's called Burris and Sons Plumbing. Yeah, so
that's
but
crazy.
yeah, my grandfather, this company he worked for.
Your grandfather worked for a very elite company. It's hard. And here's the thing, like as a black agent, I want to work with a black owned company. Right?
Mm-hmm.
And so this kind of goes back to the being of blackity black. So they offer group insurance. So group insurance, life, health, disability, dental. So let me tell you one thing. If you're having difficulty getting insurance on your own, you may want to consider getting group insurance.
Okay.
Now, it's difficult to get group insurance because if you're not established as a group for at least 1 year or more, you're not considered a group. And if you established as a group for the sole purpose of getting cheap insurance, you're not considered a group. But say it's you and 10 other guys who come together and form the group of real estate investors, and you do fix and flips, and you sit around for a year or two together, but your goal wasn't to get cheap insurance. Your goal was, we're 10 guys who want to collectively come together and, we talk about our real estate investments. Right. So that's one way that group insurance helps, because it avoids it avoids a lot of underwriting because of this thing called adverse selection. So what you want to do is, you're in your 40s, right?
Yes.
Get with like 10 guys who are in their 20s and form the group. This way your premiums will be cheap. It'll pull their premium up, but it'll pull your premium down for what you would pay for a male normally your age.
Yeah.
Right? So that's what adverse selection is. We take the aggregate. Everybody in this group, average age is 32. So now you at 40 plus will be paying the premium of somebody who's 32. Now the kids who are 23, they like, damn, that's expensive. But that ain't your problem.
Yeah. Now, let me ask you on that, right? What exactly is a family fund? Like, or because I hear that term, like, because that's what Warren Buffett initially started before it ballooned into Berkshire Hathaway. He said he started a family office or a family.
So a family
fund.
office is something different from a family fund. So a family fund it can be an ILIT, which is an irrevocable life insurance trust, or just a family trust fund that's funded with things other than life insurance. However, wealthy people, they like OPM, which is why life insurance is such a popular thing with wealthy people. Because Prime example, Warren Buffett and what's the Microsoft guy?
Bill Gates.
Bill Gates, yeah.
I used to work for Microsoft for a couple weeks.
They're both saying, I'm not leaving my kids any of my money. And people are like, oh, that's fucked up. Da, 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 da. Nigga, do you know these niggas got ass loads of life insurance? So why would I leave them any of my money when I can leave them North Carolina Mutual or Atlanta Life Insurance or New York Life's money?
He's smart because, see, like my grandfather was a very good liar.
Mhm.
That was one of the things that was very underrated about my grandfather. He had me and also even his stepkids believing that he was broke and he's actually was a millionaire. If you, let's just say hypothetically that's true, because I did hear him. I remember he used to say that he did an interview on Oprah and it was like a bomb drop where he said his kids doesn't get any money and they don't have anything coming when he died. Do you know that that's a very honest lie to say? Because, okay, let's say I'm rich as shit, I'm worth whatever, and I tell people that my kids ain't getting nothing, and then they're like, why you ain't getting it? Well, then that's what people will believe because that's what I said. I have no reason. I have no reason to lie, right? So I die, and they get it, and I make sure the lawyer and everyone's involved, take file paperwork for non-disclosures and all of that, so they don't disclose it. And then my kids get it in private, get the money in private. Everybody else will think they haven't got anything, so they won't target them. Because a lot of people don't understand. Even sometimes I forget. People will target you because you have loads and loads of money, or even if they think you do.
Yeah.
If you walk around with a gold chain that's somewhat thicker or have some level of thickness, like somebody will jack you, try to take your chain, depending on where you are.
Yeah.
So that's just a gold chain. Imagine if they know you rich, or even if you look rich, they'll try to target you. So I mean, it's a smart play, but I think that's, in my wisdom, 20 years later, I think that's why he's doing it. Just my theory.
Well, so here's why he's not actually lying. He's embellishing a bit, but he's not lying. His kids he's not leaving anything to his kids. What he's doing is leaving everything to the trust. So now that's the family fund. So now what happens is, right? All right, let's say you get with my sister, right?
Yeah.
Y'all have kids, this, that, and the third.
How's she look?
Hey,
yo. Hey, you know what I'm saying? Arranged marriages, man, I have the lowest divorce rate.
And this is
no,
true.
Just joking.
Yeah, she got some big tits, right? But so you get with my sister, right? Y'all have a bunch of kids, and you think everybody's broke, right? So you the breadwinner of your family, which is my sister, your wife, and the kids. But she came into this quote unquote broke. But every time you turn around, she buying new shit, and it ain't coming from the joint account that y'all have. So you're like, where is she getting this bitch tricking? What's going on?
Yeah.
What happens is she ain't tell you that we have a islet. I wish we did, but you know how it is with family, especially Black family.
Oh, yeah.
But we would have an islet or an irrevocable life insurance trust. So let's say my grandfather would have bought life insurance and set up this trust and put life insurance and required, hey, everybody in the family, when I die, I'm gonna leave $10 million, right? But In order for you to get this $10 million, you have to contribute to the family trust. Well, how? I didn't got no money like that. Well, in order for you to be able to get money from the family trust, you have to give to the family trust. And here's how you do it. Uncle Joe, Uncle Kevin, Uncle Danny, Uncle Paul, Uncle Rodney, Uncle Ricky, Uncle Bobby, Uncle whoever, Auntie, Pat, Jane, Sarah, Lee, Josephine, whatever. All y'all got to get life insurance. But when you get life insurance, you don't leave that life insurance to your kids or to your husband or to your wife. You leave that life insurance to the family trust. Now what happens is, hey, your son, Steven, he wants to open a restaurant. Instead of having to go to the bank, tuck his tail between his legs and come up with the parameters that they want for him to get it, he just goes, hey, hey, Lonzo, we know that you're the executor of the trust. Listen, I need $200,000. What? What do you need $200,000 for, Steve? I want to start a restaurant. All right, give me the business plan. I'm gonna treat you somewhat like a bank. I ain't just gonna be like, oh, okay, here's the money. But all right, give me the business plan. See what you got. This business plan makes sense. Here's $200,000. By the way, buy another life insurance policy and make sure that that goes into the family trust as the beneficiary. Because what is everybody in the family going to do one day? Die. Right? And so, as opposed to us giving 10% of our tithes to AME Baptist on the Mount Zion Freshwater Blood of Christ Church, or whatever, or dialing up a big GoFundMe, if we do an irrevocable life insurance trust.
I got that actual method. I got the video of that method from the Rockefeller family. I remember I saw that and I posted it because any information that I see that's valuable, I try to re-upload it as content. But yeah, I dropped it in the chat if you want to play it. It's up to you. But yeah, what the Rockefellers did to remain wealthy. And yeah, wealth can be diminished over time. Even rich could be diminished in one night.
One night, to be honest.
Yeah. But wealth, it takes a little bit of time, but it can be diminished. The Vanderbilts is what your boy from CNN. I forgot his name.
Anderson Cooper.
Yeah, Anderson Cooper. That's where he sprung from. But by the time he was born, most of the wealth was already gone.
Yeah. But it's not in the Rockefellers. It's not in the DuPont family. It's still there.
Yeah, Johnson and Johnson family either.
Man. But so let's check this video.
Are one of the most powerful, richest elite families in the world. John D. Rockefeller was the guy who really blew up the entire oil industry in America. And what they do, and the reason why they're still one of the wealthiest and most powerful families on the planet 7 generations later, is because of something called the Rockefeller waterfall method. The Vanderbilts were just as powerful and actually had more money than them. They blew all of their money by the 4th generation. The Vanderbilts literally are not even part of the conversation anymore. What is the waterfall method? The waterfall method is every single individual of the Rockefeller family got a very large life insurance policy put on them. The beneficiaries of those life insurance policies always tied back to the trust. And then inside of the trust was a cash value life insurance policy, which is used as the family bank. Now the family bank is inside the trust, so it acts as like a family vault. Now all the family members can take loans from the cash value life insurance throughout their whole life. When they die and pass away, that death benefit pays it all back, therefore replenishing all the funds that they use throughout their life. And with every single generation, the family trust just keeps getting poured in with more and more and more and more money, therefore making the family richer and more powerful, therefore creating generational wealth.
Boom.
Yep.
Right? So that's literally what Bill Gates and Warren Buffett mean when they say, "I'm not leaving anything to my kids. My kids aren't getting any of my money."
Right.
They're
Right.
not.
That's what you say to the peasants.
Yeah.
Yeah.
And now the peasants, oh, that's fucked up. Why aren't you leaving your kids nothing? Because I'm leaving them everything.
Right. Exactly.
I'm just putting it in the family trust because their kids and their so it's not actually the waterfall method. It's something called the all right, we're gonna go here with it. Hold on. Right. I gotta show y'all. So who's my favorite football player? Thomas Brady. Right? So Tom Brady is my favorite football player. And we're going to go here to Google. We're going to put Thomas Brady and Associates. So this is why when Tom Brady got drafted and he was crying about, I don't have to be an insurance salesman. Actually, before I do that, let's see if I can find that.
Okay. Tom Brady, he mentored Deion Sanders' son, Shador Sanders. That's why, that's one of the reasons why he's so so good as a quarterback. He was mentored by Tom Brady. So
Tom Brady went from an insurance salesman to best footballer in the world. Repeat this.
Okay.
Didn't
know this.
Dad. I remember taking a walk with my dad and mom around the block. It was just a tough day, I just remember being there with my mom and dad. Sorry about that. They just were so supportive of me. And they take it as emotional as I do. And finally when the Patriots called, I was so excited. I was like, I don't have to be an insurance salesman, So
Right? Now, you heard that, right?
Yeah.
Tom Brady.
Didn't know that.
Right? Now, peep this. Thomas Brady and Associates, an international independent insurance firm. Right? What does that logo right there look like? Does that look like TB12?
Yeah.
Oh, shit. Why? Meet the team. Thomas Brady Sr., chairman and principal. That's Tom Brady's dad.
Right.
Our specialization, estate planning, business planning, insurance review, and additional services.
Okay.
You want to know what they specialize in? Eyelets.
Oh, okay.
You know what the eyelet is, right? What we just looked at.
Yeah.
What's that?
That's the actual term for the waterfall method,
Yeah.
right? Yeah.
It's called Irrevocable Life Insurance Trust.
Gotcha.
Thomas Brady and Associates is a national independent insurance firm serving businesses and individuals across the U.S. with sophisticated solutions to meet their unique insurance and financial planning needs. We work with a wide range of clients, including ultra-high net worth individuals and businesses. We serve all our clients with the same level of professionalism and attention they deserve. As an independent organization, we are not tied to any one insurance company, and thus are able to use our relationships with a number of different carriers to achieve the best possible results for our clients.
Mm-hmm.
So let's see if I see who we are. AP partners, operational support. Right?
I got something for you. You can hear me? I
Yeah, I
got
hear you.
I got a bomb drop for you or whatever.
Okay.
Let me show you. It's kind of like following the money, but it's 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 interesting,
You put
to
it in the
say the
chat, or
least.
are you sharing
Wait,
it?
hold on. I'm still looking for it.
Okay. Well,
I'm
while you
still
doing that,
looking
I'm
for it.
gonna go through some of this.
Let me. I'm let me. Oh yeah. Go ahead. Yeah, I could wait till afterwards. It don't
Yeah.
matter.
So estate planning and tax, estate liquidity and tax planning, waterfall method, intra-family lending. Right now, I don't know if you've heard, but when I first came into this space, the Black Manosphere, niggas was talking about marriage and prenups, divorce and prenup planning. What did I say? You can use life insurance as your fucking prenup.
Oh yeah, that's smart.
God damn.
That's
I've been
smart.
stealing this shit from the rich white men all the time, trying to why niggas won't fucking listen.
Man, tell 'em.
Insurance as an asset class.
Right.
Remember, I told you about PPLI?
Yes, sir.
Private placement life insurance.
Yeah.
Leveraging existing planning. Tax minimization. All this is using life insurance, bro. These niggas
Yeah.
using life insurance.
Yeah, the triple crown, man, like I say, is investing, banking, investment banking, and real estate and insurance.
Yeah.
I mean, that's that. I'm not gonna say that's it, but that's those three. You talking about $100 trillion plus industry, like all of those three.
Yeah.
Like
life insurance itself is a $4 trillion industry.
yeah.
It's actually, I think, the largest industry in the world.
Yeah, I mean the country, the power in this country is those three that I just mentioned. Those three is the actual capital. When people say I don't like capitalism or whatever, that's capitalism. That is the triple crown of capitalism. Investment.
You want to know why Donald Trump won the election?
Because of what I just said, the triple crown.
Yeah, but I'm gonna tell you specifically why. Yeah. Because insurance companies don't want that. But remember, I keep saying about that regulation, bro. I need as little regulation in my industry as possible. So my industry was like, get that nigga here because he's not gonna have us being super regulated.
I mean, he is the quintessential person that is involved in that. But I just you know who's the father of the internet? Do you recognize that guy there? They call him the father of the internet on this man's internet. Because basically the Clintons administration they were in the office when the White House when the internet was kind of took off, but that's what this guy's doing now. He's running an investment firm.
Wow.
Yeah. Like you wouldn't think that. Like you're like, where is Al Gore at? No, he's running an investment firm.
Yeah.
He's president.
Yeah.
That's your boy.
That's the thing. Oh, give me 1 second. This cat is lost. He done jumped on my table. Nigga, you want in the back phone, bro. Come here. Hold on, bro. Put this cat back. This nigga just jumped on my table. I'm not with the white people shit, bro. I had to lock this little nigga in the bathroom, man. He just jumped on my kitchen table. My fault. No. So yeah. So this is Al Gore's investment firm.
Yeah.
This is crazy. Wow. I don't know if you wanted I think you could have just shared your screen if you want. Because I want you to be able to kind of go through this. Well, matter of fact, hold that thought. I'll be right back.
Okay.
So you can keep it going, say what you need to say, and I'll be right back.
Oh, okay. Yeah. So like I said, the triple crown, real estate, and then when you talk about real estate, you also It's not just when people think real estate, they typically think of their grandma's house and their mama's house. They thinking about some single family home or some apartment building. But real estate is also commercial buildings. You know, you go downtown, those big skyscrapers, you know, those are commercial buildings, right? Those are, you know, those are big, huge apartment buildings. So it's a commercial building. That's real estate as well. Even mobile homes, you know, land, and of course condos and townhomes. It's real estate, you know. So that investment banking, reason why I say investment banking, because most banks, what they do with your money, with your lazy capital that you put in the bank, and they'd only give you whatever 1%, 2%, maybe
0.01%.
yeah, 0.01%. They invest your money with it, and they make tons and tons of money with. They hire the smartest, the brainiacs, the mathematicians, the economists to basically trade with your money, with your capital, and make tons and tons of money and give you that 0.0 whatever percent that they give you. Right now, if you put $1 million in a bank account, that interest, it'll accrue to a point where maybe it'll be like, I don't know, depending on what they percentage they give you, it could be like $15,000 a year or something like that. But
actually, before you continue with that, there's a lot that's to be said about that, because people don't understand. So firstly, and I'm gonna leave this up. I'm gonna post something up, because what you
it's cool.
stated,
It's cool. I just wanted to just be like, that's where you. That's
you just wanted that to be seen.
Yeah, that's all.
No problem. Y'all, I'm so glad you're coming up here, because you've given me the ability to kind of go into stuff, because even though you don't know it all, you have an understanding of stuff, right?
Yeah.
And so because of that, let's go to bank rate really quick. So high yield savings, right? So I'm going to go to the high yield savings account. Now, right? If you'll see here, I didn't type in anything, right?
Right.
I didn't type in anything. What does that say for deposit amount? 50,000.
Yes.
So generally, that's the minimum amount you can put into these high yield savings accounts before you think you're going to get any of these interests that they give you.
Right.
Right. But people don't know that, because just like with the investing, they say, oh, minimum deposit is $25.
Mm-hmm.
And you can get a 0.01% APY. Now, yes, they'll tell you about these high yield savings from Amex. You're not going to get that, because, even though it's the minimum balance for the APY is 0. So what's 4% of 0?
It's 0.
Okay. So why the fuck does that even make any sense?
Mm-hmm.
You see what I'm saying?
Yeah. But here's the thing, though. Here's the thing. I call it a lazy man's investment strategy. And safe and secure. Banks are pretty safe. So if you take that $1 million and times 0.04%, you'll make 40 grand off of that $1 million. And it's a lazy, safe way to make that. Now, and I'll be honest, I can live off of $40,000. But what most people do is they take the $1 million, they go buy the chains, the cars, the clothes, trick on women, buy houses and stuff like that, right? But if you park your money, I'm not throwing it in the garbage. It's not the best way to do it. But we're talking about investing. This is a safe, easy way to invest. This is what I call them rich dummies don't know, because when people get in the NBA and they go sign a deal, they take the money and do what I said before, buy all the cars and clothes and all that. But if you park $1 million into, and it's just $1 million, some of them guys getting crazy amount of money, 10 million. Because if you had 10 million, you get $400,000 in interest a year. You have to file capital gains taxes. You got to get a certified public accountant to do your taxes, but
You would go with an enrolled agent, not a CPA.
okay. What is an enrolled agent? What is that?
So an enrolled agent is the highest credential afforded and awarded by the IRS. These people are
Okay.
specifically taxation based, whereas CPAs are accountants. If you want to get your business evaluated, go to a CPA. If you want somebody to do your books, go to a CPA, right? Prime example, I'll put it to you like this, right? We're both Benz guys, right?
Yeah.
If I want my Benz worked on, do I bring it to the local guy down the street?
No.
Probably not.
No.
I need to bring it to the Mercedes-Benz dealership because that's what they expect. That's all they do.
Yeah.
Right? Or at least, the Euro dealership. But
yeah, I think it's K9s, or I forgot the German name, but it's a certain brand. You see that brand in a repair shop that denotes that they work on German vehicles.
Right.
I've been so disconnected, unfortunately, that I forgot. But yeah.
But yeah, so you don't want to use a CPA, right? You really want to use an enrolled agent because they're going to help you with the best tax strategy possible, and they're going to study a lot. All they do is taxes, right? Like prime example, if you wanted an accountant, then you would absolutely not go to an EA because right, they don't do accounting, they do taxes, right? So then also a lot of people, and I keep saying this and spreading this word, if you don't make $70,000 or more a year, stop getting raped by fucking H&R Block and Jackson Hewitt and Liberty Tax and CPAs. You know why? There's something called VITA, VITA, Volunteer Income Tax Assistant. These are usually retired IRS agents who will do your taxes, governed by the IRS, for free.
Right. Yeah, you qualify. A lot of people don't know. And that's what leads people to a certain position. Because see, like I did a live stream before, and a lot of the reason why a lot of us are not rich or wealthy is because we just don't know something. We don't know. Because if we knew, we would be, right? So that's why they say knowledge is power. They said that before me and you were even born. Okay. The fact that I know that, and you know that, but a lot of people either don't believe it or don't know it. And it's like, yes, if you make below a certain amount, you can get your taxes filed by a tax professional for free. It's like just like basically one of the, look at it like a government subsidy. They because you qualify for this service, because you make a certain amount, you're already getting taxed. So the government says, okay, we'll fund tax professionals for people that make a certain amount less than this amount, and we'll have them do your taxes for free. What people do is they go to all of these, H&R Blocks and everything that are primarily like they don't care if it's the hood. It's a H&R Block down in Gary. I just don't remember where it is, but they right in the hood. Yeah, like they're everywhere, and they're convenient, and people just go to them because they want their money right away. Yeah, and that's the one reason. And then the other thing is, people actually don't know this. We can go to Walmart right now, get a table, and just ask people, did you know that? Or we can go out on the street, like people do street interviews, and ask them, did you know if you make less than $75,000 a year, you can get your taxes prepared for free? Most people, I would put $100 up that they don't know. I probably will
You would
put
win that
more.
$100.
Yeah, yeah, because they don't know. Like I even didn't know until when I found out, I was like, wow, But the thing is, it's like also I have a small business.
Right.
I found I do self-employment every year, so I can't just do a regular working tax. Okay, but a lot of people are just employed.
That doesn't matter though. Even as a schedule, because I'm a Schedule C. Right?
Oh, okay.
Yeah, bro. I'm a walking. I don't have the quote unquote structure of an LLC, but that's because I don't need it. I am a Schedule C.
Oh, okay.
Yeah, I'm a C corp, bro.
Oh, okay. Well,
But
I didn't
don't
know that.
file.
I
So,
was under the impression if you got a business, then you won't qualify for that. That's just
well,
for
if you're a C corp, that's not a business. That's a personal. People don't understand. An LLC, limited liability company, is a
Mhm,
flow through. It's a Schedule C. So you get a
mhm,
1099 or a 1099 miscellaneous at the end of the day. So guess
mhm.
what? That's why when it goes for you to try and get business loans and shit, they ask for you to sign it as a personal guarantor because you are not a corporation.
Oh, okay. Gotcha.
So there ain't no separation. It's just you put some more paperwork for no fucking reason. And again, not
Oh,
against you or anybody who has one, but just like we didn't know about intrafamily lending. Why do
mhm.
you think the rich don't want you to know this shit? Because
Right,
they're
right.
gonna make a shit ton of money off of you and me going to H&R Block,
Mhm,
right?
mhm,
And then they get to write off the money that they paid their CPA every year for
mhm.
doing their taxes.
But I didn't qualify last year either because I made over $100,000
Oh
last
yeah,
year.
so no, you didn't qualify, but
Yeah, I was hustling hard last year.
oh
But
yeah,
this year, not too fortunate. I wouldn't qualify for Kevin Samuel's high value man consecutively. I
hey,
fell
listen,
off
we
this
all
year.
go through it, right? But peep this. Just so
Right.
you know, here's the ill part about an enrolled agent.
Yeah.
Unlike a CPA who's only able to do business in the state that they're enrolled in, like an attorney is only able to practice law in the state that they've passed the bar in,
Yeah.
an enrolled agent is a federal position, bro.
Okay.
So, like, I have a homegirl who's an EA. She is in PG County,
Okay.
Baltimore, Maryland.
Yeah.
She could call you and do your shit.
Hmm.
You see what I'm saying?
Yeah.
I got another one who's in, I think she's in Louisiana.
Hmm.
She could call you and do your shit,
No, okay.
right?
Let me
Whereas,
ask you something. Let
yeah,
me ask you something. Can you doing whatever you do right now, whatever you doing to make a living, can you also live off of an extra $3,000 a month? Can get an extra $3,000 a month without you actually touching the money that's making that $3,000 a month?
of course.
Right? And that's what rich people or people that are aligned with that type of mindset know that the other people don't think or know about or don't have the discipline enough to do so. Because it's like if you got $1,000,000, that 40 grand, that's with just 4%. And it's places that pay, it's banks that pay higher than 4%. You can
Right.
you can literally make, I know I've done it before. I've lived off less a month, but yeah, $3,000 of income, interest income every month, off of this. Now here's the thing. Now that's the lazy way. In the safe way, okay, a little bit more risky. Look up companies that pay dividends. They pay more than 4%.
Yeah.
So you think like Exxon or something, Exxon
Well, you
Mobil.
know, life insurance pays dividends.
Exactly. That
You
is
know,
it.
Mass Mutual pays an 8% dividend.
Right. So now at 40 grand, see what I'm saying? Ain't this grand? Ain't this lovely? Like that instead of 40 grand, now you at 80 grand. Now you got an extra $6,000 a month.
Oh, let me tell you what's lit more about life insurance though versus any other product that pays interest. All these products pay simple interest. Right? Life insurance is the only product that pays compound interest.
Okay.
Right? You know the difference?
Compound is it compounds over time, it grows in value.
So let's just use the 10% interest for easy numbers. So you put $1 million in there, 10%, you get 100,000, right? So then, Miss Phoenix, what's going on? So then, the next year, you're not gonna get 10% interest off of 1 million. You're gonna get interest off of 1,100,000.
Okay.
So what's that now? That's 110,000 more you're gonna get.
Yeah.
So now the next year, instead of getting interest on 1 million, that would be simple interest. So every year you get 10% on $1 million. So year one is a million. Year two is 1,100,000. Year three is 1,200,000, so on.
This is how, ladies and gentlemen, this is how the rich stay rich and get richer.
With compound interest, and something just popped up that I'm going to show y'all. And this is, again, these fake ass financial gurus don't go over. But let me hit you with this compound.
What we doing right now, our underdog, selves. I don't know financial channel that I know of actually goes in this much detail about how, I mean, it might be little niche channels here and there, but not as thorough. They just giving you word salad and just talking about stuff and whatever. But we're actually presenting. This actually is valuable information right here. This worth at least about $1,000 or more to the right person that has it, because you got a lot of people that actually don't even know what to do with money. That's why they go to professionals, estate planners and stuff like that.
Shit, it's professionals that don't know what to do with the shit.
Right, exactly. That too, man. Oh my God, this is
but so that's simple interest. So compound interest will be, all right, I got this $1 million year one. At the end of year one, coming into year two, I got my 10%, my 100,000 off of it. So now my balance is 1,100,000. Well, year three, my balance, my interest is on the 1,100,000 because it's compounded. So now at the end of that year, instead of me getting 100,000, I'm gonna get 110,000. So now year three, my interest is off of 1,210,000. So now instead of me getting 100,000, I'm going to get 121,000 in interest, right? So now my balance is 1,400,000, right? And then 10% off of that is again another 140,000. You see, so it just keeps ballooning, right? So
now here's like I say, it's risky, but the dividends, do pay more than this savings. And what you're talking about is even even better. Here's the thing that what, like, and this kind of goes into what banks do. Like, why would a bank give you 4% off of your money? Okay, or an insurance company even, like, they're making money off of your money. They have
if we're giving you 8%.
Yeah, they have experienced traders that trade with your money. This is what I've been trying to tell my boomer uncle, that I told him actually that Donald Trump was going to win. He never believed. He doesn't, like, everybody probably has, a lot of people have one boomer or somebody, older than them that never believes what they say. Like, I mean, I told him Donald Trump was going to possibly.
Oh shit, they're live. I might have to go up there. I'm sorry.
Yeah, you can do. Yeah, it's cool. You could do it right now if you want.
Yeah, like this literally just popped up at
go ahead.
on my
Go
shit.
ahead.
So
Might
it
as
says,
well. Go to the belly of the beast. Shit.
yeah, Federal Reserve interest rate decision, live updates now. And this was updated November 7th, 2024 at 2:13 p.m. Eastern. So it's 2:20 p.m. Eastern. So
Right.
this is like fresh.
Go ahead. Go for it.
So,
I ain't shit. We talking about investing. That's what it gets no more direct than that.
Yeah, you can't get more than and this is, you see this Emeritus? This is the carrier that I use. They're talking about the PEPs. And PEPs is a pooled employer program. Nobody even knows about it because it's a new thing that just popped up this year. I barely know about PEPs yet. But basically, they're pooled employer programs so that as opposed to you doing a 401k, so on and so forth, you can actually pool with other companies that don't even share the same industry as you. Right. So like when you had that computer programming, computer company, they would have had to, you could pool with other computer companies and y'all could share in the cost of coming up with your retirement account. But now as a pooled employer program, you don't. I guess I know more about the PEP than I thought, huh?
Yeah. So what I was gonna say about the investing is that you might not feel like, okay, it's two ways you could do it. You could get with a trader. That means you put money in a brokerage firm or hedge firm. That's it's risky as well. But if you actually are, if you can learn to be an investor, a stock investor, you can learn how to invest. The best thing is to probably learn from someone that's already have done it, because it's a lot to learn, it's a lot to know. And this is what I told my uncle, because he's getting burned from his 401ks. And I got a video on that too, because I just posted on my page. But basically, he's getting burned because he's not really getting a lot of upside. But the thing is that, see, this is the same guy that I told him to give me some money, and I'll make some money for him. But see, I'm the type of person, if you don't believe me or you don't believe that I can do something, then I'll just go with it. I mean, I'll still be your friend, I'll still answer your calls. But when I tell you that if something happens, I'm gonna tell you, hey, that's on you, man. And I'm gonna do my thing, But the thing is that a lot of millionaires, they make their money off of also the stock market, and it grows substantially way more than 4%. It could go crazy. I made off of one stock, I made over 100% in one day, multiple times, many of times. I also lost money, but it just stings to understand that, I appreciate the money that I made, but just knowing that if I had extra zeros and commas, could have made way more money. I could have. It's okay. Here's the thing. The amount of money that hedge funds, and that's why they act the way they do. They act like they're almost like a god or something. Like they walk as if, they hop out of their Lambos, and they the way they operate. But whatever the case may be, the thing is that the amount of money that you can make trading is unbelievable. It's incomprehensible to most people, because most people make about the range between $40,000 to $75,000 a year, right? Just waking up, going to sleep, sweating themselves to the bone, back-breaking labor, whatever the case. Okay, it's people that make that within an hour or less trading in one day. They make more than that. What you make in a year, hard blood, sweat, and tears, getting up early in the morning, sleepless nights, whatever, it's traders that make that within minutes. And I've seen it. I know they do. And I've done the numbers. And it's like that's where the money is. I mean,
So I'll give you an ill one,
yeah.
right? When I was a stockbroker trainee at a firm called EJ Sterling, and again, I like my perspective is dynamic because I was a Wall Street dude.
Yeah.
I did a cold call for one of my senior brokers, which, just so you guys know, stockbrokers is a young man's game. There's not this, 60, 70-year-old, very experienced guy behind you placing a trade with, the stockbrokerage firm. Not even with, Charles Schwab or none of it. They get young people in there.
Mm-hmm.
Now, the principals of the firms are, Al Gore and the old guys. All right? But the guys trading are fucking young.
Mm-hmm.
This kid made like 12.5 off of a phone call I made.
12.5, 12,000, 12 million.
12,000.
Oh, 12,000. Okay.
No, he didn't make 12 million.
Oh, okay.
He made 12.5.
Oh,
Now,
off of the sales commission, basically.
yes,
Oh, okay.
right? And that was one phone call.
Mm-hmm.
Right? Now, if you know anything, hold on, let me see if I can find him. Oh, that's funny. Israel Newman. So, oh shit. So let's see when they did this here. So EJ Sterling LLC, at the time I was with them. Oh, I'm glad I wasn't with them then. I left them right before this. But EJ Sterling LLC, now known as Allied Millennium Partners, a brokerage firm headquartered in New York City, has been censured by FINRA based upon the firm's consent to findings that the firm failed to adequately supervise its business to detect and stop unsuitable trades.
From being executed in customers' investments account or investment accounts. Okay. Wow. That's interesting. It happens. But yeah, man. So it's like, it's not surprising to me. People know you can make money.
Customer accounts. I just want to see the amount. From 20% to 154%. Okay, go ahead.
Yeah. So like, the people know you can make money off the stock market. They just don't understand what you can make. And I mean, you can lose too, but again, we talking about risk versus reward. 4% off $1 million. It's not bad. Okay. 8%, like what you talking about, not bad. But I'm just talking about trading, just basically not even advanced trading. Advanced trading is options. I've seen options plays where it's 4,000% positive. Okay, I've also been on the tail end of negative options, but that 4,000%. Imagine making 4,000% on $1 million. Just, 4% per 4,000%. I mean, like, you know what I'm saying? Like, it can happen. It can even get more than that. I mean, like, even Shiba, when Shiba New spiked that crypto, that spike was in a range of 40,000%. That's why only $100 would have made you over $1 million, because it spiked so high.
Now, see, I don't know shit about crypto, bro. I'm not even gonna hold you.
Yeah. I mean, I'm not no crypto god or no crypto, like, I don't know as much about crypto as I do like with stocks and options, but Yeah, like the Shiba new. Well, forgive me talking about it. Let me just kind of bring up the chart if you don't mind, because
Go
I
ahead.
just wanted to show you. We talking percentages, you know. I just wanted to actually just show, because me talking about it is it's worthless if you know I can show you.
First class in that flight. Hold up, I just peeped that picture, bro.
No, I wasn't no first class. That was coach, definitely coach. I was going to meet my cousin to watch Vikings play the Bears. They won that day. But yeah, in Minnesota. So like this is Shiba new. So that spike is right here. See this doesn't tell you the percentage. So let me actually go to Yahoo Finance. Shiba new. Because they don't give me the percentage. So let me go to all. So I think this happened in like
That's 19 thousandths of a dollar right now.
Yeah. Yeah, it's
See, that's why I swayed all the fuck away from crypto, because I was like, yo, we're talking about the thousands of dollars. Like I can't, but again, you gotta realize I came from Wall Street. So for me, I'm like, what the fuck? You know what I mean? But I realize I need to learn about this because I have not all my clients can afford tens of thousands of dollars and shit. So, you know, maybe they can afford $100. I don't care if it's a dime bag in the park. I want pizza.
Yeah, let me see here. So Shiba, I'm trying to see, they don't want to show you the percentages, I think, a lot of times, because people
Well, they're
would
showing
like
right here. Well, that's Micro Block, Alphabet, B of A, Twilio, Adobe.
Okay, because it's mind blowing once they show you that.
Let me see if I can find something.
Shiba. Let me see. Right? They even Google don't. I guess they don't. They stopped showing crypto. Let me see. Let me go back to. Yeah. Let me see Shiba. Let me just put in Shiba new.
I was gonna try and tell you to go to Morningstar, but Morningstar don't show it neither.
Yeah, like because this was when you see it, it's crazy to see the actual percentage. I think
Coinbase, maybe, yeah.
Yeah, Coinbase should show it. That's what I use. Let me see here. I don't want to sign in, but let me see here. Let's see
Go
if
back
this
up. I
can,
saw historical data.
let me see. I think this will probably show it. Let's see, max. This doesn't show. Maybe it just shows the volume. Let's see. Yeah, it was ungodly amount. Like it was like 40,000% or something crazy, but it's like
they're not gonna show that after a while.
it's like it's crazy the amount of
because number one,
jump.
so here's what they don't want. They want Sam Bankman-Friedman to catch up onto that shit and his ilk, right? But they don't want you and I, who are unsophisticated or sophisticated, unsophisticated investors, to catch wind of that.
Yeah.
Right? Because if we catch wind of that, right, and we have the actual opportunity to get into that shit, what are we gonna do? Get into that shit. You see what I'm saying?
I'm getting it now because it's actually on my
on your radar.
No, It's on my I'm screen recording it from my Coinbase app. So I just got it. It's worse than what I thought. It's worse than what I said. It actually that day it went up 2.7 million %.
Wow.
Okay, so let me I'm gonna post it on my Facebook page real quick. Yeah, because it just people just don't understand. Like they want a lot of times people just want people to just stay poor. Like they don't want people to get any opportunities to do anything in the markets. They don't want that. So they want you to be blind to the facts, you know. Like a rapper used to say, I forgot what his name was. It was an 80s rap song, but
KRS?
yeah, something like that. Yeah. So like, wait, look, I just posted in real time of the spike. So it's a video. I just screen recorded it.
Okay.
So let's see here. So yeah. So like, let me share my screen right quick.
Yeah.
Right. There we go. So I'm not just window dressing or anything like that.
Okay.
So let me play this again. Wait, hold on. Wait. Where did I go with that? I just had it's still there.
Yeah, it's
I got two windows open. Okay.
Yeah.
Yeah, all right. So let me just play it again. Let me pause it when I get to two. See right there. Boom. 2.7 million %.
Damn. Yeah, that does say 2.7 million.
Spike 2.7 million %. Unlike, I mean, of course, this was a pump and dump, but
right.
I mean, this is the amount of money that's possible, or even, I'm sure somebody that's a crypto nut or, stock crazy nut or whatever, stock guy, they know probably higher percentages or whatever. But this is why $100 would have made you millions of dollars or $1,000, right? Because it went up this high. And just think, like, I mean, it's crypto whales and all that type of stuff. And I don't want to go down that rabbit hole, but I mean, this is the possibilities. You know what I'm saying?
You also said something that's very, 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 very valuable. And this is why they depend on, again, those quote unquote lazy investors and stuff like that. The 2.7 million % is dangerous, right? So again, it goes to behavioral finance, right? Not diminishing what you say.
Unfortunately, I showed what I'm holding.
No, you didn't. Don't nobody know. Don't nobody know.
That ain't nothing, man.
Don't nobody know.
Don't change.
Yeah. But what happens is the danger of it is people don't have behavioral finance, right? So they're like, oh my God, 2.7 million %. Yeah. Man, if I had $100 in there, and like you said, it's a pump and dump.
Yeah.
So people like me and the folks who worked at EJ Sterling, we're welcoming that because we know we're gonna get a bunch of people to pump it up, and then we're gonna offload that shit. But you're gonna be stuck holding the bag.
Right. But the thing is, the tripped out thing is, I'm kind of glad I did share a little bit more than I cared to. It just goes with my whole point. Now, when after Donald Trump won, the crypto.
Yeah, it did drop, but then it spiked again.
Yeah, it was like 30% or as far as percentage in today's return. So even at 5.9%, theory remains true. If $1 million, as far as that 5.9%, you've made $59,000 off of just today's return. You know what I'm saying? Like, you know what I'm saying? That's why it's like again, like you can make way more money investing, but it's risky. But this is what you're doing when you put your money in the bank anyway. You just having somebody else do it. You know,
Yeah.
whatever arm you put it in.
And there's
Insurance.
protections there.
Yeah.
That's the major
Right.
thing, right?
Yeah.
So it goes back to, I don't know how long you had been here, but it goes back to kind of what I was reading from Finra earlier. So you in your 40s, you kind of still have the risk tolerance to be able to do this type of stuff, right?
Yeah.
But maybe not, because you got kids and this and that and this and that, right?
Yeah.
But somebody who's fresh off the boat, you know, just having his nuts drop at 21 and is listening to Steffes Cole or Mr. Lucario or all these other dudes,
Yeah.
should be putting his money behind me and you.
Right.
Because we're going to show him, listen, like you said, the real thing is to get your ass to become fucking cold. You know how you become fucking cold? Getting your money right. Because once your money's right, can't nobody say shit to you.
No, nobody. Yeah, you walking on water, damn near.
Yeah.
Because women will know. That's just a whole nother realm. Like, I mean, it's just you become a passport bro. Like when you become rich like that, you're a passport bro in your own country. That's what I say. Like, because especially if you a debonair dude already and you got money like that, like millions of dollars, your life in America would be just like what people travel to different countries to try to, you know, mimic or cosplay or whatever you want to say. You're like that in your own country.
I'm trying to figure out how to redact some stuff. I want to redact some information on this thing that I'm trying to show right quick.
Okay.
It's a PDF, and I know you more technical savvy than me, so
yeah.
It's a PDF. I'm trying to figure out how I can edit it to redact it. Let me see. Annotations.
But I feel dumb though. I feel dumb as hell because I was talking about crypto before this spike in 2021. I was online. I was actually doing an investment challenge. I missed this one. This would, if I caught this one, I would have been a legend for the rest of my life. Like, as far as, I mean, I still have that possibility, but I would have been the king as far as like, because I would have caught this. I was doing that investment challenge, the Robinhood challenge. If I would have caught this bad boy, and I would have dumped it eventually. I mean, once it's after it spiked, because it spiked literally the next day. I in Dogecoin, I caught a little bit of it and actually took my challenge off to like it scaled it higher. But that Shiba Inu is what I missed out on. Actually, that Shiba Inu spike that I just showed that one day, that's like Dogecoin level type. That one day, whenever day that was September 8th, 2021. That day would have literally made you a whole bunch of money. Actually, it was even higher than that because I stopped it prematurely, I think. But
how the hell do I edit this? I just want to cover the guy's name.
Oh, you gotta go to like a PDF editor. You gotta open up some type of PDF editor.
Oh, that's fucking whack.
Some people use like, and I don't know if most people in the professional business world, even corporate world, they use Adobe Pro. Adobe Pro allows you to edit PDF documents. There are some free version, not free versions, but there are some cheaper versions than Adobe Pro. But Adobe Pro is what a lot of corporate people pay for software.
Adobe Acrobat, Adobe
Pro.
Photoshop, Adobe Express, Adobe.
It's Adobe Acrobat Pro.
Okay,
yeah. That's how they make money. That's one of Adobe's biggest software money makers, because you got to understand, lawyers, doctors, accountants, investors, any professional, they need that because they have to edit It allows you to actually create Adobe or PDF files and also edit PDF files and also convert PDF files to Word, to text files, to Excel, all kind of stuff.
Let's see if I can do it in the document viewer for Google Drive. That might allow me.
Yeah, you could probably use Google Docs or something like that, possibly. They got free versions. Probably you might have to. I don't. You have to fucking find it or something like that.
Yeah,
But,
I'm trying to do the free shit.
Yeah. Like it's ways around it, but yeah, it's like yeah, definitely that's something that's
Let me see
needed.
if I can.
You could sign. It allows you to put signatures on it. So yeah, that shit is the creme de la creme, man. Adobe, man. The Adobe PDF, boy. Pro, man. I think it's like, I don't know what the price of it is now, but it's always been hella expensive. It's more expensive than Adobe. I mean, for Microsoft Office, it's one of those pricey.
All right, I know what I'm about to do. I'm about to just email me a version of this via my cell phone. Pull it up.
Yeah. Let me stop sharing this here.
I'm sorry. I didn't mean to have that.
That was exciting, man. That was man. That was exciting, man. I ain't gonna lie. That was exciting, man. That shit was because the possibilities, even just the possibilities, is just exciting, man. Even though I ain't really, made that much off of it, but just the possibilities is exciting, man. I ain't gonna lie. That shit, that's why I hopped on. It was like, man, I already had my microphone ready. I was like, man, I was like, oh man, investment. I was like, it's like pizza day in grade school, man. It's like, what?
It's like, oh, this is it right here.
Are they about to wheel out the TV today? Oh man, it's on.
Where? Let me see how I write this. Screen.
Investing is like probably one of my favorite topics in business.
I feel you, bro.
Crazy. Man, that's wild, man.
You're gonna do like this.
This is wild. All these memes. It's crazy. They got a meme of Kamala giving the McDonald's order to Donald Trump in the drive-thru.
Oh yeah, I saw that.
It's crazy. But you know what, man? The tripped out thing is, yeah, she's gonna be, have to be on the unemployment line in a couple months.
Yeah,
she'll be looking for a new job. I mean, I'm sure she'll find one. But yeah, she's not a senator anymore. She's not the vice VP no more. So she got to get a new job.
Yeah. This is a fact. Let me see if I can send myself this email right quick.
I'm gonna go get me some more coffee, man. I'll be right back.
Yeah, I'm right here. Because I want you to see this next thing about the put. All right, let's send it. And that should be coming through to my email in a second. Here we go. Yeah, I can't open this up like this. And then what the fuck? I can't open it in a new tab. Okay, so I just need to increase the size of this. Okay, here we go. All right, cool. That's easy. Then I should be able to share now. Let me see if I can share this screen because this goes to what you were talking about. So when he comes back, let me make sure I got everything redacted. Yes. Okay. So what I'm showing y'all right now is a redacted version of a client's actual brokerage account or self-directed brokerage account with Chase Bank. And I'm going to show you with life insurance what we decided to do is going to beat the bejesus out of this. And where is my illustration? Launch life designs, log in. Damn, some coffee sound good right about now. I'm about to have to fire up me some coffee and a cigarette. Where's the client? Boom. Showcases. Modify. Close this. I'll close this. Close this. Yeah, delete that. Oh, what the fuck happened? Why did it do that? Son of a bitch. Why would it do that?
Yeah, my cat, he like sitting under my wood stove. I mean, like near it.
Yeah.
Like as his personal sauna. I swear that cat, man, is more bougie than I ever dream of, man. Like he doesn't eat like even like the fine food, he doesn't even care about it. He likes what he likes, and that's it.
That's
like
it.
He done that cheap shit, the whisker, the Friskies and stuff like that. He don't like that.
My cat
crap.
won't eat Friskies.
Yeah, that little canned food just like comes out like spam. He'll like lick it, maybe take a little bite, like some. He
and
looks
then
at that
shit.
Yeah, he'll like look at that. He look at that shit like it's bologna sandwiches or something. Man,
See, I gotta get my cats Blue Buffalo, bro. They only eat Blue Buffalo. Now, here's what's really bougie about my orange tabby, right? Because when I first got him, I didn't have no cat food, so I gave him real tuna.
Yeah.
So I had a couple of different tunas. I had Starkist and I had Bumblebee.
Yeah.
This nigga will not eat nothing but Starkist tuna.
Yeah.
I take the Bumblebee, I put it in his shit. He look at me like, nigga, what the fuck is this? I know this ain't Starkist. Yeah. I'm like, yo, how the fuck you know, nigga? It's tuna.
So whatever he don't eat, I gotta put it outside for the possums come, the raccoons, the cats. Yeah. The cats usually try to come first, but if the raccoons come and the possums come, the cats they don't go nowhere near them. But yeah, I just have to give him like it has to be. He likes the what is that brand? I forgot, but it's like kind of like it costs a little bit more than the cheap stuff. He don't like that like canned stuff that's like all processed and stuff. He ain't eating that crap. Yeah,
it'd be like that.
And he's an alley cat. He's technically an alley cat. Yeah, he was living outside.
Cat, huh?
Yeah, he was living outside in the garage. He was
oh, that's crazy.
Yeah, I've got him because I was doing a camera project. I'm MacGyver. I be installing cameras. Man, you think I'm just some dude? Man, I'm trying to tell you, man, I be installing cameras and all kind of shit, man. I was installing a camera job. This dude had wireless cameras outside his house, and he had kittens. His cat had got pregnant, and he was outside, and he had like 3 or 4 kittens. I grabbed one, and that was how I got my cat, man. So for him to be like outside like that and be that bougie, it's crazy.
That is.
Okay, what we looking at here, bro? I see about $200,000.
Yeah, so this is an actual client.
Okay.
Right, that's why I was like, yo, I gotta redact. I'm not trying to, you know what I'm saying?
Yes, sir. Yeah.
But so he came to me. This is in a brokerage account.
Okay.
With Chase Private Client.
Okay.
So I told him, I said, bro, you're an accredited investor because he also owns real estate. He was like, yeah, they keep telling me that, but I don't know what that is. So I had to explain to him, even though he got all this money with Chase Bank with no fucking problem, and I'm still chasing this nigga for my fucking fees. It is what it is. Shit happens.
Yeah.
But I'm like, my nigga, we're gonna do something with it. And if you'll notice, in the last month, he lost about $2,000.
Yes. Yeah.
Right. So I'm like, yo, do you like paying taxes on this money every year? No. All right. So let me show you how to beat the shit out of this with life insurance. Right. Now you see this is JP Morgan Chase, right? JP Morgan Chase Wealth Management.
Drop your credentials, man, so people can contact you, man. Just
I got it all in the links to the vids, but
okay.
Yeah. I'll drop it here.
Cause I shared this video to my Facebook page.
Okay, so they might not. I might have to put the what's the name? But yeah, I got all in the description, or if not this video, most of my videos I got all in the description where you can find.
And drop something in the hat, man. This guy's he's able to give you real world examples of actual clients, past clients. I'm like I said, I'm not a professional yet. I aspire to possibly open an investment firm one day. Actually, I was going to talk to you about that because I kind of have the same sentiments that you have about the other guys in the space and all that. Like, I get the whole enclave stuff and going to have little seminars about tech and all this other stuff, but I think that it would be cool if we started an investment group. You know, all of the YouTube guys started an investment group, so we not coming online talking bullshit, and we actually got some money put together. We put in our money where our mouth is, and not just to go have events where we,
So you got my number, I got yours. We're gonna talk behind the scenes about that.
Okay.
So this particular client has a small brokerage account, $230,000. The reason I say small, most of my clients are putting $1 million away in an annuity with me. So when I see this, I'm like, yeah, that's a small account. Nigga, I've been working for the last 25 years. Yeah, that's a small account. Right?
Yeah.
But, and I don't I don't do that to try and make dudes feel bad, but you got to understand, when you go to Chase Bank Private Client, they're not scrambling for you right now with this amount of money. They're like, yeah, we'll take it. Get the fuck out of our face.
That's like that's one house. That's one and a half houses in Gary, Indiana, right there.
Now hold on. Here's why I say that, right? Because now you saw that from JP Morgan.
Yeah.
So now, what is this? An article from August of 2024. Ironically enough, the same time he showed me that what's the name, right? Okay. And it says how to use life insurance as a financial asset. Do you see that from JP Morgan Wealth Management?
Yes.
Why the fuck? But you and me, because we don't come in there with $250,000 or more, they will never tell us life insurance is an asset. Can you believe that?
Yeah.
Right? So, you know what? I'm going to just put this in the back chat for you. You might want to share this with your Facebook group.
Okay.
Right? I've gone over it a couple of times myself already. You might just want to look at it
Yeah,
on your own.
yeah. Let me share my Facebook group too, because I think I need to share some more of it because
Yeah.
I would like to have some more
Listen, I get
people.
kicked out of a lot of groups and shit. I ain't even gonna hold you because when I go in there, I be talking my shit. Like there was this guy who was a like a exposer of stuff, but then on his Discord, everybody's, oh yeah, I'm trading this, I'm trading that, and I'm like, all right, cool. But by the way, this, that, and the third, and I happen to be in this field, but they didn't know that I come. A lot of people don't know that I come with the trifecta, or like you said, the triple crown. That
Yeah.
no, I ain't just insurance. I'm
Yeah.
insurance, investments, and real estate. Like I'm all of the above. You know what I mean?
Yeah, I mean, at the end of the day, I'm a talker and I have a lot of insight, but you are actually credible because you've worked in all industries. Like I say, that's your title. You're the triple crown. You know what I'm saying? You might as well put 3 crowns next to your.
Yo, I'm gonna start that now. Triple crown.
Yeah. You know what I'm
That's the
saying?
new title. So I want to show you now. I showed you the dude with the 200,000, right?
Yeah.
So what I was doing for him was, listen, we're gonna take that out in chunks because right now you're paying taxes on it every year, and you don't want to pay taxes. So we're gonna do what is this? A 5-year strategy, right?
Yeah.
Now his assumed interest rate is 5.92%, right?
Yeah, I see that.
But I'm gonna show you something real quick. Updated interest rates. Right? You ready for this? Right?
Yeah.
Because legally we can only show you a certain amount. Right? Legally, we're showing him 5.92%. Right? That's what he's getting compound interest. But actually, here's what he's getting.
Okay.
You see that?
Yes.
That's almost 10%.
Right.
So on that same million, and remember, this is a fixed product, right? It mirrors the S&P 500. So
Right.
0 is your hero. So while you're in the S&P 500, and yes, it can go up 20, 30, 50%, it can also go down that, right? With this, so also people don't talk about this thing called cap rate or participation rate. Remember here, I told you legally the max illustration rate we can show you is 5.92%. What is the max illustration rate he's getting here? 5.92%. So we're under promising and over delivering with life insurance. So even though we show you, hey, Bob, you're going to get 5.92%, what you're actually getting is 9.25%. And we give you that index credit on the 10th and the 25th.
Okay.
Whoa, what? So I get monthly compound interest instead of APY? Right? If I talk about some of these indices, have you ever heard of the S&P 500 sector rotator daily RC2 5% index 1 year point to point? No, because nobody talks about it.
Right.
Wow.
Do you know any like sports guys, like NBA guys or NFL guys, or are you in
I
that
used to go to
circle?
the Barclays to try and get some of the guys from the NBA draft, but I never got a baller. That sounds so much like one of these gold diggers.
Yeah, I can. I mean, that's it is what it is. Like, so I saw a video today was kind of interesting. It was it was from Andrew Tate. Some people like him or hate him, but he said one of his friends was like, or one of his investment buddies was like, basically business is just making money off of other people's OPM, basically other people's money. So everybody's involved with that, really, if you really think about it, because business is the board. Resistance is futile. You either work for a business or you have a business. So the business is making money off of other people's money. Basically, you're trying to get other people's money. So the thing is that whether how it looks, I mean, that's what you're trying to do. You're trying to make money off of other people's money, and then you try to make them some money. Because what would be the incentive of them giving you your money? Other than, you know, trying to make some money. You're not trying to scam them like a lot of other NBA guys. You know, they get with these accountants, and then next thing you know, accountants stealing millions of dollars from them, aka Kevin Garnett, aka Tim Duncan, Scottie Pippen. The list goes on and on and on. But you're trying to make money off of commissions and stuff like that, and the business is reputable, the companies are reputable that you work for, you know what I'm saying, not scamming. But yeah, these guys, man, if you could get someone, even myself, I mean, I do all kind of shit. If I can get in a inner circle or inner sanctum, you know what I'm saying, like man, shoot, all you need is one client, right? You just need one client.
Well, so I have one client who's in the entertainment industry who shares the same account as 50 Cent. Right? So I'm trying to climb up in there. It's hard, especially with black entertainers.
Yeah.
Boy.
Pause.
Yeah, it's so difficult. Right? But let's look at this, because again, I think this is actually only for financial professional use. I don't think I'm supposed to be showing this to the general public.
I mean, you would use this as a sale point, right? For a potential client? No. Oh.
Technically, because, and these aren't New York rates. I'm not showing New York rates. Yeah, so technically, listen, just don't tell nobody.
Okay.
And worst case scenario, all that will happen is my compliance department will call me and they'll be like, Alonzo, we about to fuck you up. Take that video down, and then I'll just take the video down. Because they threatened to sue me once before when I did some shit like this. Yeah, this shit crazy. I'm like, man, y'all got billions of that. What you gonna sue me for? 50 Cent? Like, what the fuck?
Right.
Yeah. But so the S&P 1 year point to point. So
wait, hold on. This is just a little infomercial, or not so much infomercial, but it's just a little comedy, or just whatever. So you remember the guy Tyrone in Chicago?
Yes, I'm Tyrone, and that guy.
No, that's dude.
That's
I
Philly.
think he's in Philly. Yeah. So Tyrone busted out the Chinese nail shop, and he got arrested, right? Because they was beating up some black chicks or whatever. So dude like went from that to like, he's like a kind of a community organizer now, like a community watch patrol. He's got like a community watch patrol. Dude like running for senator now. And he's an ex-felon. I'm not talking about he took somebody's purse or wallet or burglarized somebody's home. Nah, he left bodies. He was in a street organization, and he was dropping bodies. So dude,
it don't matter now. Our president.
Yeah, he reformed. He reformed, and ironically, he's a cat guy. He's a cat. Well, no, he's got a dog. He's got a little dog, a little toy dog. But he's definitely reformed.
It's worse than the cat.
Yeah, he's reformed now. I will say he's atoned. He's reformed. You can make repentance. If you did wrong, you gotta do a whole shit ton of right. Okay, you gotta pay. You gotta pay repercussions. I mean, but the thing is this. It's funny though, because he's running for Senate now. That's what I just saw.
That is hilarious.
Yeah. But dude pretty cool though. He's I think he's done a lot of good, but yeah, I just had to mention that.
That's a beautiful thing. Yeah. So real quick, before I actually go into these numbers and explanation of all this shit, I want to
Yeah.
show y'all again. You saw it was what $234,000 or whatever, right?
Yeah.
So the guy is 48 years old with
Yeah.
this.
Yeah.
Okay, so we're gonna put $37,000 a year into his life insurance policy until age 54. We
Yeah.
have it here in the cap 1 year, cap as the 5 year. The capped S&P 500 1 year point to point, which is
Yeah.
illustrating, like I said, maximum illustration is what 5.92%,
5.92%.
but his actual index crediting is going to be 9.25%. So
Okay.
almost double
Yeah.
what we told you you're gonna
Yeah.
get.
Yeah. Now let me point out something, because people kind of get lost in the sauce and the numbers and kind of get bored easily.
Mm.
As a layman or a person outside of the insurance arm, just stating, basically, a lot of people don't have insurance.
Right.
We did plenty of
I
live
don't have life
streams.
insurance.
Well, there's people that can qualify for life insurance that don't have it.
Well,
They
yeah,
don't
I
have
can't
any.
qualify. He
Yeah,
said,
yeah.
well,
It's people
people
that
that can
don't have any
qualify.
underlying health conditions and all of that type of stuff, and because it's a lot of disqualifiers. I'm sure you've stated the disqualifiers on your channel. Now, it's a lot of people, especially Black people, that do not have any form of insurance besides GoFundMe insurance. And we all know what GoFundMe insurance is. Okay. You drop the link after someone's passed away because obviously they didn't have enough to get buried. Now, we also know from being on this YouTube, portal or whatever website, that it's been people that are notably kind of somewhat infamous or famous on YouTube that have passed away and also have had GoFundMe links with the God respect the dead. We're not going to mention names, but some people, a lot of people don't have life insurance, for some form or fashion. And I'm not talking about they don't have any property that could be sold, that they own outright. They don't have any assets that they can be sellable after their passing. They don't have a will and testament. They don't have a trust. What can you help those people with? Like how can you bridge the gap to those people? Because it's a lot of people that like what is the cost of a policy or some type of UIL or instrument that you could set, financial instrument that you could sell those people to that they don't have to have the GoFundMe insurance plan.
I have to thank you. I am so fucking happy you asked this question as a layman, because when I explain it as a practitioner, it doesn't come off the same. So, step one, and this is a major issue that I gotta hold on. I gotta turn on the camera and take down this fucking screen for this, right? Because this is one of the major. Hold on, let me do it like this. So that's one of the major issues that happens with a lot of people in this field, right? No, I heard your question. Well, what number one, the cost of insurance is how much does it cost to go to the doctor? I don't know, because I don't know what they're gonna find, right? So then it comes down to the type of policy you get, right? So, are you getting term life policy? Term life policy is going to be the cheapest thing possible for the largest death benefit possible. But just so you know, in order for your term life policy to pay out, you're going to have to be part of the 1%, because 99% of term life insurance policies do not pay a death benefit because people either outlive their term or most of the time they lapse their term. 47% of term life insurance policies are canceled by the second year of your having term life insurance. Whole life insurance actually stays on the books longer because it costs more, and people don't want to lose that money. Make sense?
Yeah.
But then when you're looking at, like, my favorite product is the IUL, but by no means am I going to tell you if you're looking for a death benefit, right? Like, let's say one of the gentlemen who was famous for writing books and passed with a son and new wife.
The famous, oh yeah, yeah.
And he
had underlying health conditions, though.
That's all right. There's
yeah.
still life insurance, especially at his age range, that you can get.
Okay.
Actually, if you're 45 to 80, you can get no exam whole life insurance.
Okay.
That's called guaranteed issue.
Okay.
Right? Now, those are what's called final expense. So I don't generally do final expense.
Okay.
That would kind of be the low rung, if you will, in terms of life insurance.
But you could direct you into someone.
I could direct someone to it, yeah. So,
and that's what a lot of people actually do need, at the very least, because a lot of people don't have anything. And I know what you're talking about. People know. I mean, the people that passed away that they weren't in the best of financial health, and it showed because of the repercussions of after they were dead. Like, once you pass away, people can kind of see, okay, was he all right or was he not? Like my sister didn't write no books. She didn't have a YouTube channel, and she wasn't online like that, but she worked for nursing home. She died of COVID related to high blood pressure. She died of a heart attack. It don't be, but it happens. I mean, it's like,
my condolences, I'll say,
yeah. I appreciate that. But yeah, she had insurance from her job. She had some monies saved up from she had actually vacation time that she didn't use. So my nieces were able to, they had horse-drawn carriage for her funeral. Wow. I mean, I'm not trying to, I mean, I don't want my sister, I didn't want her to pass away, but they didn't have any issue with burying her properly. I mean, they gave her a proper burial. And they didn't have to send a GoFundMe link on social media. So it was my sister was on government subsidies. So if she can do it, the whole fucking country can do that shit. Okay. Yeah. I mean, you know what I'm saying? Like, I mean, I'm just keeping it real. Like I'm talking to you in a basic form.
Because you don't normally get to ask these questions.
Yeah,
right?
Yeah, I don't, because I don't have, it's not everybody sells insurance. And I'm trying to speak to the masses as far as, okay, in generality, my sister wasn't rich. My sister wasn't making a whole bunch of money. Like, you got to think, like, it's some people that, I mean, the guy that you're talking about was making a lot of money. He knew rich people. He knew celebrities. He was, technically supposed to have had everything spread out because he was also highly educated. He was a business guy, but people have habits, and people, you don't know what people's lives and what they consist of, what they got going on. But the thing is that I do understand what you're talking about. And like I said, my sister, she was not, I would say nowhere near as financially affluent as the, the guy that you're talking about. Right. But she had, the job set her up to where she had insurances. She had, monies coming from also her last couple paychecks from her job.
I'll be honest. You said she was in a nursing facility working?
She was working, in a nursing facility.
So let me tell you what some of our favorite clients are: nurses, firefighters, police. Because nurses, so you might not have you probably only knew about what was from the job. And again, I'm not saying, here nor there, because I don't know the situation myself. But generally, nurses stat the fuck up on insurances.
My sister was like, out of all of us, I got two sisters. And my older sister, she was my older sister. She always been a go-getter. She was a workaholic. She liked going to work because her friends was at work. So she was like one of those social workers that loved the job because that was like the people that she worked with, she hung out with and stuff. You know, her diet was kind of, she knew she wasn't supposed to be eating the food that she had, was eating fried food. Very similar to my mother. My mother had similar health conditions, and she just wanted to eat whatever she wanted, and it was a lot of stuff. But the thing is that she had those underlying health conditions, as well as what happened with the pandemic, and her working at a nursing home made her under direct exposure to the virus, that, you know, the pandemic virus, the COVID-19 virus. So that kind of led to what happened. But she just she didn't make nowhere near even $50,000 a year. It was like less than that for sure. And she was able to just have a very simple policy, and just a couple paychecks that she had after she passed, and then vacation time. And of course, some of her coworkers passed around the hat and gave it to my niece, my nieces. But the thing is that if she can do that, I mean, it's no reason, it's no excuse if you're making hundreds of thousands of dollars a year, or you're making more than that, to not have something set up to after you pass away. We all guaranteed death. That is no exception. Everyone is guaranteed that.
You've also got to realize you've got people in my industry who are, because here's what happens. Like I said, a lot of people are just getting sold term insurance, right? And I'll even tell you, if you're looking for, so first of all, the way it goes is this. What do you need for a car to go? 4 wheels, right?
Yeah.
Obviously, there's other stuff, 4 wheels, the engine, steering wheel, Yeah. But you need 4 wheels, right?
Yeah.
What most, especially online financial guys, are doing is saying, just get the 2 left tires.
Right.
You're not going nowhere.
Now, in my case, if I croak, you know, within the next minute, I'm a veteran, so I can get burial at the, you know, nearest, like basically veterans burial ground, fully paid for with the salute, with the gun salute. So that's what I'm entitled to, me being a veteran. So I don't need to worry about like no GoFundMe because I'm a veteran. But
so you're not worried
most
about
people
going, you're worried about leaving stuff for your children.
Yeah, exactly, man. But the thing is most people are not veterans, so they don't have that entitlement of a proper burial. So yeah, it's a thing, man. And a lot of people, you see it at least once a month, you see that GoFundMe link. And that GoFundMe link insurance is not adequate. And
so here's what I can tell you as the layman, right? Number one, again, and I gotta pull a lot of onus on just like in the manosphere, I put a lot of onus on the guys. So the financial sphere, I got to put a lot of onus on the professionals, because what we do is I don't look at that. Just get 2 wheels on your car. You'll be all right.
Yeah.
Right. So for example, the gentleman we were talking about, who's probably up there wealth wise. So he was probably told the same bullshit that all these guys said: buy term and invest the rest. Yeah. And if you're looking for pure death benefit protection, that makes sense. But you also have to kind of know when you're going to die, because buying term, investing the rest, what they're telling you is that you're not going to live off of OPM. You're going to live off of your money, because the idea that they give you is, oh, well, you know, your kids are going to only be young for 18 years and you're only going to have your mortgage for 30 years. So after that, you know, you don't need this life insurance
Uh-huh.
because, you know, after 18 years, your kids aren't dependent on you, which is
Right.
bullshit. But what happens is they're also telling you that your investments are going to accrete enough that you're going to be able to live off of that money for an undetermined amount of time. So remember you were saying the 4%? That's one
Yeah.
of the things that Dave Ramsey, I'm not going to talk about these other bullshit guys. Let's look at Dave Ramsey and Sue Zorman because
Yeah.
they tell you by term, I'm going to punch up, right? So Dave Ramsey also tells you about the 4% rule, which ironically enough, he does it the 8% rule. So the idea, number one, there's less than $200,000 in most Americans' retirement account at time of retirement.
Yeah.
So they can't even talk about this 4%, 8% shit.
Yeah.
Because 10% is 20,000 of 200,000. And they can't afford that. Because these qualified retirement plans, when you start taking the money out, you're going to pay income tax and capital gains tax. So likely he got duped into buying term and investing the rest, thinking that his investments were going to accrete to a well enough level to pay his future generations in the event of his passing. But they also don't tell you about this. So when a person passes and they have assets, real estate, so real estate has to be sold on the open market. Your real estate, when you pass, may not be the same value as while you are alive. And so they can go back 6 months and offer the highest price possible. But who's to say somebody wants that house or can afford that house in a timely fashion? Right? Number one. Now, investments. So your investments might be up that 2.7 million% while you're alive. But 10 years from now, they could be down 2.7 million%. All right. And let's say old boy got hit by a bus last night. And now he has these investments, stocks, bonds, crypto, all that shit. Well, you have to have an executor of your estate to actually sell that stuff. And they can look back 6 months or whatever the highest price was, right? But let's say I use Tesla and Ford. When I was using my short strategy on Ford, kind of like they call dollar cost averaging, is really just a short strategy, meaning the more the stock decreases, the more of it you buy. Right? But I got the munchies. I had to grab me some cake.
Oh no, it's cool. I'm looking for something to support like what you're saying because I just posted it on my channel. I was actually looking for the video that we did a year or two ago about insurance. Because I wanted to create some content because for this very purpose, as far as the amount of underinsured or lack of insurance.
51% of Americans think they don't have enough insurance. Or it might be 56. If you go to LIMRA, LIMRA, the Life Insurance Marketing and Research Association.
Oh, okay. LIMRA. Okay. So this is actually a video, and this is a warning because I'm 44. You are, I think, like 40 or 41.
40.
Yeah. So this is like this could be technically 30 years into the future because technically what I'm gonna show is like just imagine if this couple if you could let me present this couple here, what if they had also a backing of the 401k? What if they also had like what you offer, which is the UILs, which is as like a backup to their 401k?
Oh,
would
you're
they
gonna
be
love what I show you.
what would they be doing? Would this be their reality? Most likely not. But let me play this video.
This is certainly not part of Larry Gessick's retirement plan. The 77-year-old electrician by trade leaves at 5:30 a.m. and heads for his part-time job unloading trailers at a local supermarket in St. Petersburg, Florida, for $14.75 an hour. His wife, Joyce, 66, prepares for her workday, making $14 an hour as a full-time legal administrator.
It's not really a retirement.
What is it?
It's working every day.
The Gessicks came out of retirement not because they wanted to, but because they had to, and are among the 11 million Americans, 1 in 5 over 65, who are still working.
It's hard, 77, still busting my butt.
So I call it the work, retire, repeat syndrome.
Labor economist Teresa Ghilarducci says work is the new retirement.
More than half of the people who are retired right now do not have enough money to be retired.
Who's to blame for all of this?
I blame policymakers who experimented with our retirement system 40 years ago, and they are not saying the experiment failed.
That experiment is what we know today as the 401k, named after part of a 1978 law that offered companies an alternative to the traditional pension plan.
The thought was that Americans just need a little bit of financial literacy and they can just save on their own.
But in fact, many of today's older workers were never taught enough about safety.
I just have to pause this real quick because I just forgot. So if it wasn't for the short pension that I had from working for Chicago Public Schools, I would have been hard pressed to start my store. I actually needed that pension to kind of get my store off the ground, because that couple grand that I got from working in Chicago Public Schools for about a year, actually less than a year, I used that to pay for my licensing, get my store off the ground. If I didn't have that, man, I'd be hard pressed. But yeah, did you have anything that you want to say? Or I'll just continue on.
So yeah, let me say this, and then I'm gonna run and grab something to drink while you're actually playing the rest of this video. But so the 401k is not a law; it's a tax code. Okay. Right? 401k, 403b, TSP, 529. These are all tax codes. Okay. Right? Life insurance has a bunch of tax codes too. So while you're playing this video, I just want you to remember this term, LIRP, L-I-R-P. After you finish it, I'll show you the IUL that is gonna kind of match with this. But before I continue, because we were talking about the average American doesn't need an IUL if they're just looking for leaving and death benefit. Get a traditional whole life insurance policy and just pay your premiums. The IUL is for a strategy. The IUL is generally going to be for a LIRP. The IUL is generally going to be for using your IUL as a source of hard money lending as opposed to going to a hard money lender for your real estate deal, right? But the IUL is not the Swiss Army knife like all these motherfuckers be telling you online. I mean, it is a Swiss Army knife. Yes, it has a bunch of different uses, but they don't show you how it works. I'm going to let you continue there. I'll be right back.
Okay.
Saving and investing for retirement.
I grew up on a farm. Nobody there instructed any of us to put money aside and make your own way later on down the road.
Whether you're past 65 like the Gessicks or almost their ages, there are a few rules of the road to keep in mind. Basically, everyone needs a plan. First, figure out when it's best to claim Social Security. Next, fund an emergency reserve. Still working? Set aside 6 to 12 months worth of living expenses.
Another thing, and this is just this is what I have, as far as my financial offerings. If they would have used my plan in my book, the Millionaire Savings Plan, they wouldn't be in this position either.
Already retired? Make it 1 to 2 years worth and keep that reserve in a safe, easily accessible interest-bearing account. Like many working Americans, the Gessics were more doers than savers. They drained their 401ks.
I think to us, it felt more like a savings account than to focus on, I need to have this piled up to actually live on.
They have a mortgage, a car loan, and are paying down about $12,000 in other debt. But even with Social Security, some old pension funds, and their paychecks, money is tight. All these expenses and the debt pay down leaves you with very little money every month, right?
Yes.
How much is that?
$50.
Had the Gessics waited to age 70 to claim Social Security, they would be collecting more. Can you look at a time where you feel like you can breathe a little more easily, or are you still under stress?
Yeah, it's stressful now, but I think we can see the light at the end of the tunnel.
Getting there won't be easy. For Eye in America, Jill Schlesinger in St. Petersburg, Florida.
All right, so you see those numbers there, right?
Yeah.
Am I muted? No, okay. I thought I was muted.
Oh,
I
no,
didn't
no, I
think
haven't seen it.
or you don't see those numbers yet. I'm sorry.
No.
You heard those numbers that they were talking about.
Right.
So remember I said LERP. So that answers your question right there, because what is a LERP? A LERP is called a life insurance retirement plan.
Okay.
Okay. If you go to Google and ask what is a LERP, they'll tell you it's a live action role player. But yeah, that's it right there. So let me do this. So number one, this is why the IUL isn't for most people, because most people are only thinking about life insurance from the death benefit perspective of if I go outside and get hit by a bus tomorrow, I want to make sure my kids can eat and my house is paid off. And that's why people force term insurance down people's throat, right? Because most people don't know what life insurance can do for them. Yeah. You see here, we have Mr. Chase Bank self-directed IRA from the numbers that I showed you, all right? That breaks down to $37,000 a year for 5 years. If I do the illustration, right? So let me explain to you how, remember you asked about, how much does a certain amount of life insurance cost?
Yes,
well,
I did.
If you'll notice here, so this is the illustration software of one of the particular companies I use. Face amount is what's known as death benefit or face amount. We know it as face amount as the professionals. Now you'll notice here it has words, right? Minimum non-MEC. It doesn't have a number. And then it has premium, and it has the word input. And if you'll notice here under face amount, the amount is blank. And then the amount that he's paying is $37,000 a year, or a little over $3,000 a month. All right? So again, your average American, if I say put $1,000 a month in life insurance, they can't fathom that because they're just thinking it's a check when I die. Right? Now, if you notice, he's age 48. I'm going to print to age 121. But the amount he's paying is $37,000 a year to age 54. Right? You see all that?
Yeah, I see it.
Okay. So, for a healthy, extremely healthy 48-year-old non-tobacco user, $37,000 a year would get a $639,000 death benefit. Now, you know what? It would actually get him substantially more of a death benefit, but he's overpaying for the life insurance. Because what people don't understand when you buy life insurance, when you buy cash value life insurance, you're not buying a death benefit. You know what you're buying? More money.
Okay.
Okay? So, this is why things like IULs aren't for your average American. Somebody like you, you're an investor, right? So, if I say to you, yo, you got to spend $1,000 a month, that's not, you're not going to be like, oh my God, what the, oh, you know what I mean?
Yeah.
You know what I mean? You might be like, hey, that's steep. That's not in my budget. What about, $450, whatever. But you're not just going to be like, absolutely not. You see what I'm saying?
Right.
So,
I wouldn't, if long as I have a plan. If it's
you just muted.
Oh, can you hear me?
Yeah.
Yeah. Everything is part of a plan. As long as you like, do you know another thing? You mentioned that like 58% of people don't have adequate insurance or no insurance at all.
Right.
Like 34% of Americans also don't have a budget. And a budget doesn't cost anything. A budget could be on a napkin.
Yeah.
They don't have a budget. So basically 34% of Americans is like, that's a big figure. Roughly, that's roughly about,
we got 300 million Americans in America. So
that's actually about 70, close to 70, 80,000, 80 million, 80 million. Yeah, 80 million. 80 million people that don't have a budget. Or actually close to over 100 million people that don't have a budget. So that's a big number. And when you don't have a budget, you don't know where your money is going. You don't have a plan of where it's going to be accounted for. So it's going to be a lot of surprises.
Yeah.
And what people don't, I mean, like I said, it's you talking about a budget. A budget is like, it doesn't cost anything. I mean, you can get pay for some type of fancy accounting software and all of that, but you can write a budget off of a notepad, and you could follow that every month. But people don't have that, and it's like again, if you budget for, okay, I gotta put $1,000 a month for retirement, and that's going to be your budget every month, you just account for it, and you know what you can afford and not you can't afford, because your budget will tell you so. So, yeah, that's all that is.
That's a good way to look at that. Now, what does he get for this, right? Because people always say, well, I'm willing to buy it, but it depends on what I get. Well, if you're buying life insurance for the death benefit, you don't get shit. Realistically.
Right, yeah.
Right? Because you got to die for anybody to get anything out of it. That's why you buy term insurance, because you're like, hey, I know I'm going to die. It's probably going to be between now and 30 years from now. Now, remember something I told you. Remember I said 401k such and such is Internal Revenue Code? What does it say here? IRC 7702.
Yes. Yeah, I see that.
That's an Internal Revenue Code that has to deal with life insurance. Just like IRC 72, IRC 101A. Right? But again, your average American is just going to, because investing sounds nice, because like you said, look, it went up 2.7 million%. But a motherfucker with no budget really has no business dealing with that.
Right. Unless you know it's gonna come and you just take that risk. I mean, but how many people knew? If I knew, I probably, no offense to you, I probably wouldn't be on this live stream, because I'll be too busy, probably on somebody's island, with one of the natives. Probably going up and down some kind of motion.
There you go. But guess what? You didn't
Yeah.
know, because who's gonna know?
Right, exactly.
Right?
Yeah.
So some of the things you're gonna get out of a permanent life insurance are living benefits. Terminal illness, where you get up to 75% of your death benefit tax-free in a lump sum. Chronic illness, where you get up to 50% of your death benefit tax-free in a lump sum. Critical illness, where you get up to a quarter of your death benefit tax-free lump sum.
Mhm.
What are each of these? Terminal illness. You went to the doctor 3 days ago, and 3 days ago he told you had a year to live or less. Terminal illness. Chronic illness. You can perform 2 activities of daily living. You can't toilet, bathe, feed yourself, clothe yourself, none of that. Go to the bathroom by yourself, none of that. Chronic illness. Critical illness. End-stage renal failure, aka dialysis, blindness due to diabetes, strokes, all sorts of shit. Right?
Mhm.
And then the remaining death benefit, it sits there. Obviously, if there are any loan balances or withdrawals taken, that would reduce it still. But mind you, this person is paying approximately $3,200 a month, right? So now let's look at and here's what I just explained to you. Terminal illness, chronic illness, critical illness, invasive life-threatening cancer, stroke, major heart attack, end-stage renal failure, major organ transplant, ALS, blindness due to diabetes, paralysis of 2 or more limbs, major burns, coma, aplastic anemia, benign brain tumor, aortic aneurysm, heart valve replacement, coronary artery bypass graft surgery. So imagine you had a $1 million death benefit and had one of these conditions, which in the Black community, this shit happens every other fucking day. Oh, Aunt so-and-so's in the hospital because she had a tumor.
Are you telling me that people actually could pull from their life insurance and they don't even know it while they're still alive because they have
It's
critical
right here in black and white, brother.
or current,
Yes.
yeah, terminal, chronic, or critical? Because I mean, like one of my uncles, he qualifies for probably critical. Because he just had basically no, he had surgery for they removed his pancreas because he had prostate cancer.
So that's an invasive life-threatening cancer.
Yeah. So
right?
he would have been able to pull
He had a $1 million
50%?
death benefit. He could have pulled a quarter or $250,000.
Okay.
Tax free.
Okay.
And now you don't have to use that whole $250,000 for the surgery. Let's say the surgery, they'd be like, listen, the surgery is going to be $85,000. All right. Guess what he could do with the rest of that fucking money? Go be on somebody's island bouncing up and down.
Right. If he could.
Well, yeah. I mean, yeah. Hey.
I don't know. I don't really want to. Well, having to have
I got
like
2 uncles who just had a stroke.
Yeah.
One had a stroke and he got both legs amputated. The other had a stroke and now he's being a passport bro marrying some bitch in Malaysia with $0 fucking dollars. Imagine had he had life insurance.
Right. Well, if I mean, like, I think, like, I don't know, man. Removing your pancreas to me is like kind of getting neutered. I mean, I'm just, it just.
Well, that would have been a major organ transplant.
Yeah, yes, like, I'm just. I mean, he's a joking type, so he gets it. Like, he's not. I mean, he's no, he's about the same age as those guys that couple. In that video, but
in his 60s and 70s.
Yeah, he gets it. He's up in age. Something happened. I tried to kind of curtail him into a natural, holistic treatment, but if you don't believe, you can't achieve. So
yeah, this is true.
it's I be trying to sell people on believing in
Put
stuff,
your
and
link in the chat for that one too.
and a lot of times the tripped out thing is people are. This is my gripe, and it's not me complaining, but it's just people only believe you a lot of times if you hopping out of a Lambo.
Yeah.
And it's like, okay, I mean, by the time I hop out of a Lambo, I'm not selling you shit. I'll probably at that point, I have saleswomen on bikinis, selling stuff. And I'm probably, what I'm saying, doing Tubies with commercials with my commercials in it, what I'm saying, selling my products at that point. At that point, I'm past me selling you something. I'm not selling nothing at that point.
So now, peep this.
Yeah.
Remember, I haven't even showed you the numbers because this goes back. Oh, there's also something called the lifetime income rider with certain carriers in life insurance policies. So this one, at age 58, when he has $257,000 worth of account cash value, he would be able to get, he'd be age 58. So 10 years from when he started the policy, he'd be able to pull $1,268 a month out of the policy for the rest of his life. Right? So if he lives till 85, he would have pulled $426,000. And if he lives till 100, he would have pulled $654,000. So I want you to remember those numbers. Well, we can go back to them. Right? Because now I want to look at the numbers. And this is what a lot of agents do. They skip all this other stuff and they just go right here. Now, you see where it says annual cash flow, right? I'm going to show you how that works. Annual outlay. Remember, he's only paying this for 1, 2, 3, 4, 5, 6 years, right? So $37,000 a year. He's going to pay $222,000, right? But remember, at age 58, he has $250,000 that he has access to, right? Or account value.
And he's paying $1,000 monthly.
No, he's paying $3,000 monthly.
$3,000 monthly.
A little over $3,600.
And what was okay?
$37,000.
What was his actual How much income did he make a year, or what was his income?
So remember, I showed you the JP Morgan Chase account.
Yes.
Right. So if I do this times what, 7? So that was 259. So it was like 233,000. But I told him, look, you got to put an extra 37,000 in there, right? And actually, he had another spot where he could take another 37 grand out of another retirement account. So I said, do that, because right now, what you're paying in this retirement account, this self-directed IRA with Chase Bank, you're paying taxes on every year. Oh yeah, did I tell you this girl's tax-free, tax deferred?
You did mention it's tax excluded.
Now, guaranteed policy values is FDIC. If the insurance company, the day you bought the insurance, starts losing money, this will never happen, but we have to show you what the numbers are going to be just in case, right? Now, the alternative is what we would call the midpoint, right? It's kind of the middle of what's actually happening and the worst case scenario, right? So there you would grow at a 4% interest rate, right? And this still runs for a pretty long time. So this would run until he turns 106, and then he wouldn't have any money or death benefit, right? But now this one, he's paying $37,000 a year for basically 6 years. At year 6, his cash value is already $221,000, right? Now, this particular policy is not set up to be robust for him.
Did you know his income? Because I do. Was he already retired? What was his tax?
Retired. He's 48 years old. He is a municipal worker. So
so he was only the $200K was what he saved.
Yeah,
of what he has.
that's his investment. That's what Chase Bank. That's a
Oh, okay.
self-directed IRA. So that's
Oh,
money
okay.
he's earned and put into the investments. He's got
Okay, so
other
that's just
retirement
part of
accounts.
his monies.
Yeah,
That's just
he's got
some
over $1
money.
million in other retirement accounts.
Oh,
But
okay. So he's got 7 figures. He's got 7 figures. So that makes sense. So he can afford the $3,000. That's, I'm not gonna say it's chump change, but that he can afford the 3 grand.
he's already got it.
Yeah,
I'm not
yeah.
taking any money from him. This is money that's already there, and we're
Right.
taking it from the left hand and putting it in the right hand.
And he's making money monthly off of his retirement accounts and other
No,
other
you don't
things.
make money off your retirement accounts. You pay taxes on them shits.
Oh, okay. Oh, okay.
Now, like his 457,
Mm-hmm.
which is the police and firefighter and first responders retirement account.
Mm-hmm.
That's in what's called a target date fund, just like your average 401k.
In about 10 years, he's gonna start to balloon as far as
No,
actually
he's going to start to be screwed because just like those other people who had the 401k. So
Mhm.
here's what you don't know. Remember, what were the tax rates 40 years ago? Were they higher and lower than today?
probably lower.
Right, they were lower, especially during Reagan era. The income tax rates were lower. So now we have this huge deficit in America. We're over like $36 trillion in debt. We just sent $6 billion to Ukraine. Where the fuck do you think we're going to get the rest of this money? Taxes.
Right. Exactly. A lot of people, like if you was on my live stream, I would have dropped a bomb because a lot of people forget that how broke America actually is as far as the actual national debt. They forget about the national debt.
Yeah. We're $36 trillion and growing if you go nationaldebtclock.org in debt. So the way that they sent $6 billion to Ukraine, that wasn't so. For example, a lot of people who voted for Trump the other day, including myself, but I'm an independent, so I don't give a fuck who's in because at the end of the day, if you ain't doing what I want, fuck you.
If I had to vote, I would have voted for Trump because obviously, and my vote would have been right because the aftermath. You saw how delusional the pro Kamala people actually were. Those people, the way they reacted, they would have been qualified for an insane asylum.
Yeah. Oh yeah.
So I mean, thankfully that the whole country was not delusional. I mean, because I know mental illness. I've seen it, so I know someone is mentally ill. And you see a lot of that from the responses from
that shit was crazy.
But that's another conversation for another day. But this is very, very intriguing because I know people will be like, the average person is 77% of Americans are in debt. So most people are not going to probably, they're going to look at this like another bill. That's the way they're looking at it. I mean, I ain't going to admit, I'll admit, I'm in that category as far as, I'm not heavily diversified as your client, but I see the potential. I see the possibilities because.
Well, peep here. So age 54, right? He put in a total of $222,000. So let's look at age 54. He's got net account value, or he's growing interest on $221,820. So what that means is over the course of the last 5 years, he basically paid $1,200 to make sure that when he dies, his family gets $639,267. See, when you do the math, it don't look like that much of a bill now, do it?
No. It doesn't look like a bill to me, but I'm just looking at it from a perspective of how I know the mindset of that 77%. You know, I know that mindset because I used to have that mindset. And
Right, but if you turned around and told them about Shiba Inu, they would jump in all hands down. And I'm not
they
just
might you got some percentages of people that wouldn't. You
well,
had millionaires on YouTube that, you know, I'm not going to drop any names, but you know, they mentioned, you know, they're crazy as hell, batshit crazy, because they also mentioned because they didn't like crypto, and
yeah,
they also mentioned that okay, they don't like crypto, but they like, you know, getting fellatio from 15-year-olds on
oh
public
shit, I know who
space,
you talking
on
about.
YouTube, on the internet for the world to hear.
Yeah.
And I mean, it's like, you know, it just, do you want to follow advice from someone that, you know, is that lopsided in fucking in intellectual judgment? I mean, like, obviously you don't, and you don't do that, but yeah, that would have cost you out. Like, just think of the repercussions. And this person was very, very he had a big channel and a lot of subscribers. Imagine the people that did not buy crypto because they was listening to this wacko that, you know, that you know, made a. I'm not gonna diminish the fact that he made a lot of money,
but he
the,
probably also wouldn't buy insurance.
I don't know, but the thing is that he said plenty of times that he besmirched people buying crypto. And this was before that Shiba Inu bubble, the Dogecoin bubble. And here's the thing, like I say, I'm not heavy into crypto. It is altcoins, because basically you got Bitcoin. Bitcoin is the granddaddy, and every other coin opposite of Bitcoin is considered an altcoin. You have all kinds of crypto coins that are altcoins that go up in value every single day, all day, and twice on Sunday. So you can, you know, you can make a lot of money in also altcoins, and it's a lot of them. Is too many to even mention. It's like they come out with some every day almost. Like, so the thing is that most people know Dogecoin and Shiba Inu and Bitcoin and maybe
Ethereum.
Ethereum, Ethereum. So Ethereum, yeah, like that's all that people mostly know. Maybe XRP,
That's
Solana,
what pissed me off. I got
Cardano.
on the wave with Ethereum with somebody, and it bellied up, and I was like, "What the fuck?" But I also do Bitcoin directly on my Cash App.
Yeah. It's like a lot of different cryptos that people have missed out on, other than just, you know, Bitcoin and the most notable. So yeah, you following people like that will cost you money, you know, because any hustler, I'm gonna tell you, the best hustlers or the best investors, your boy, actually he's from East Chicago, Indiana, Ian Dunlap.
Yeah.
Most credible investors, like, or even investors that understand, just like myself, anything that you can make money off of and not, you know, risk going to jail is just, you know, it's good. You know, if you know you flipping wings, that's cool if you're able to make a profit from that.
Yeah.
Like, you don't besmirch anything that can possibly make you money.
Right.
Is there risk involved with everything that you invest in? Yeah, obviously it is. Life is risky. You know, that's why people don't live in Gary, Indiana. They don't live in Chicago because they know it's risky. But anything can happen at any time. But the thing is that, yeah, I don't besmirch anything that could possibly make you a profit potential. I mean, what you just mentioned is very, very exciting. Because
I ain't even done yet.
I mean, I just know if a lot of people had that, they would have been in a better position. Okay. I
Right.
just know they would. Even if they didn't have $3,000 per se, I mean,
You don't need $3,000.
you know, it could have been like maybe 1,000, maybe even 100, maybe even 300. They
Yeah.
might have not had 600,000. Let's say they had 60,000. It would have been better than fucking nothing. It would have been better than an old Buick with, you know, a missing title.
Niggas said an old Buick.
You know what I'm saying? Like, I mean, I'm just keeping it all the way 100. Like, I'm not gonna lie to you.
Nah,
It's better than a old camper inside a parking lot. I mean, the back of the garage.
Big
You
facts.
know.
So here's where it gets more exciting, right? So again, after that 6 years, year 6, he's got 221,000 of account value. Now, here's where you'll hear people say, well, what about the fees? And they're absolutely right. And this is why, again, the IUL is not for everybody, right? Because I'm going to have to pull it back up, but a lot of agents will give you the IUL and they'll give you the death benefit based upon how much money you're paying, which I did too. But I did it based upon how much money you're paying is overpaying for a death benefit, right?
I'm gonna be right back. I gotta get some water.
No problem. So if you'll notice here, ladies and gentlemen, at the fees are the surrender value. So what is the surrender value? That means that I am canceling the policy and I am getting my money back. So yes, you're gonna lose, $12,000 because the insurance company needs to make some money. So basically, they charge them what, $2,000 a year for life insurance? Would you pay $2,000 a year to make sure that when you died, your family got over $500,000? Because how many years would you have to pay $2,000? Let's see, 500,000, right? Divided by 2,000. So you'd have to pay $2,000 a year for 250 years to equal that 500,000. Well, you're not going to live for 250 years, so there's no way possible for you to put $2,000 a year away and save up $500,000, right? So this is why this is exciting. So now remember, right? We said here at year 10 when he has what, $257,000 worth of cash value.
Yes.
He could trigger the lifetime income rider at this point. So he could say, you know what? I want to receive a check from my life insurance for the rest of my life while I'm alive. So if he received it, now remember, he paid a total of $222,000. So first of all, let's see, 222,000 minus $257,480. So already the insurance company paid him $35,000 for having that death benefit, right?
Yeah.
But then let's add the fact that he's going to get, let's say he lives till age 85. That's another $426,000, right?
Mm-hmm.
So let's go minus 426,078.
Okay,
So
now that's what he gets, right?
That would be what he would get if he triggered that lifetime income rider.
Now here's the thing, because even the mindset of people would not believe you can even achieve those levels, right? That amount of compensation. But keep in mind, because this comes from, we're talking about investing. Keep in mind, like, the reason that this amount is possible is you have highly skilled investors, as well as, you know what I forgot to mention, Alonzo? And you can call me Abdul if you want, if it,
okay, no problem.
whatever. It doesn't matter. Okay.
Like, you use my name.
The thing is this. I forgot to mention, forget me, forget Alonzo, forget any Joe Schmo, whatever. Most companies, I mentioned Ken Griffin, they use computers, high performance computing, okay, that do high frequency trading, algorithmic trading. They have trading models that trade automatically and make millions of dollars a minute. I really want to say a second.
Yeah,
But
millisecond. Was that you that was talking about the AI trader that
yes,
yeah,
I've been talking
and it was
about
like a
that for years.
millisecond.
I've been talking about that for years, and I've dabbled. I've definitely dabbled because I went to school for programming. I went to college for programming. Now, the thing is that I forgot to mention that. So you remember I said, I talked about the Shiba Inu. I talked about, the 100% gains in one day. So imagine you got a computer that is trading a frequency of like no less than 50% profit as far as percentage profit off of trades, and you got billions of dollars in capital that are accessible to trade. BlackRock has trillions. Okay, so that's how they're able to pay that. This is nothing for them to be able to pay that. I know the back end of what goes on. I mean, you do too.
Yeah.
But this is definitely something that you should have, because most people don't have nothing when they die. Like I said, I mentioned the GoFundMe insurance plan. Okay. So the thing is that you probably, when people see this, the average person is even like mind blown, because they like, damn, you get this. But
and remember, these numbers are based off of a 5.92% interest. But remember what he's actually going to be getting.
So the thing is this, man. Hey, man.
Just basically double all the numbers that I'm showing you.
Yeah,
what he pays out of pocket.
Yeah, I'm like, okay, it's possible because of that. And then, I'm not trying, in a way, because I'm so knowledgeable. To be honest, I kind of I'm complimentary to you and your presentation, but I'm actually counter complimentary, because I'm one of those guys that work for the company that trade with the money that they make. You know what I'm saying? I'm one of those guys. And I'm actually not even one of those guys, because they use, like I said, quantum computing, the big boys, to trade and make money and profits and get it in and out of trades in milliseconds to, basically make ungodly amounts of money on a daily basis.
They make the money your city makes in a year in an hour.
Yes. Ungodly amounts. I mean, that's why a lot of times these guys are heavy on coke, liquor, all kind of speed and shit, because it's just the money that's involved is crazy.
They kind of got to spend money on shit. So
the best episode to kind of see that world is Billions. The show Billions on Showtime.
Or Wall Street.
Yeah, that too. But the Billions actually, it shows you that hedge fund world. Like the sales associates are millionaires. They driving to work in Ferraris, Lamborghinis, you name it. And that's the sales associates. Those are the sales, the basically traders, not the managers, not the supervisors or, assistant managers. Those are just the trader associates. Like,
so I'll tell you a joke about that, though. The wealthiest guys, so the top salesmen in these firms and like on Wall Street, so they have to remain broke so that they have an edge and that they remain the top salesperson. So you're going to see those guys spending lots of money on hookers and coke, because if they're not fucked up and with their back against the wall, they won't perform as aggressively.
Yeah.
I don't know what it is, but when they know, damn, I have to make this money, they make it happen.
Yeah.
But so something else you said about the fact, so Whole life insurance gets its cash value differently than IULs, right? So whole life insurance gets its money from bonds, but IULs, like you said, are probably, well, they trade options. That's how they get cash for these IULs.
Oh my god! Oh my fucking god! I mean, that's like, because I'm not. I mean, I fucks with options. I haven't really mastered the options game. Obviously, I mean that. I say obviously because if I did, again, I would probably be richer than shit. Because I mean, no, not really, because it depends on how much money you got. Because but options is the fastest way you can turn a little into a whole lot quicker. Because I mentioned you need extra zeros, but you do to trade certain options, you do too. So, like for example, to actually buy into to get a S&P contract, S&P is $5,000 a contract, or actually a particular share of S&P is over $5,000.
That's why the cash account folks don't fuck with that stuff.
Yeah, because you can't. You don't have enough. Your money ain't long enough. So but it's certain stocks that are lower, and but it's a different monster. It's it's like I say, options is advanced trading. Okay. In my opinion, some people might be like, no, it isn't, but in my opinion, it's advanced trading.
Oh no, FINRA even says it's advanced trading.
Oh, okay. So
and FINRA is the financial industry. That's why I be beating people in the head when they say they're day traders. And I say, do you have a margin account? You don't need a margin account. You can trade in a cash account. You're not a day trader. Now you may trade on a daily basis, but you're paying for those securities in full up front before you can sell them.
Right.
Which means that you're not a day trader.
Right.
Because if you execute 4 or more trades in a 5-day period, the FINRA considers you pattern day trader, and whatever brokerage you're using or whatever brokerage software you're using, will put a kibosh on you doing that shit.
Right, they will put you on timeout. Yeah. But the thing is that with options also, it's very similar to gambling because you enter a trade, like say for example a call is how I remember it is, or train myself to remember it is, call up. You call up someone. So a call is it's going you're basically predicting that the stock is going to go up. And then a put is, okay, you put down, like you put down your baby. So a put is you're speculating that the stock is going to go down in price. So you put a call for, Apple, and then it goes lower. And in essence, it should have been a put for you to make money, but you made a call prediction. So the thing with options, and I could be correct.
You just let it expire, though. You don't have to execute.
Right. You could wait till it expire. But the thing is that if you're out of the money, which means like I say, if it's a call prediction and you bet, I said bet. That's what I was actually going to end.
But you're also talking my language, in the money, out of the money, all that.
Yeah. If you basically put in a call and it goes out of the money, it goes basically towards it goes lower, the stock goes lower, you stand to lose all of that that you invested. Okay. And the reason why I'm doing Freudian slips and saying wager and betting, because I also am a gambler. It is very, very close to gambling when you are basically investing in options, because you stand to lose all of your money in options, because if you basically are out of the money, your options contract expire worthless.
Yeah.
So it's not for the faint of heart, But if you guess right, the amount of
Then yeah,
percentages, the amount of percentages that you can make as far as profit is through the roof.
those small margins.
Yeah.
But so yeah, the IUL gains because they trade options, and that's how they build the cash value and the interest that they're going to credit you.
Yeah.
Right. And now again, they're going to mirror the index, like the S&P 1 year point to point, the S&P 2 year point to point, right? Where you get a 22% cap rate, 100% participation rate, right? Or par rate.
But keep in mind, this is not people, investing your money. These are high performance computers with AI models that they don't guess wrong.
Yeah.
Like I would, or anybody else, or Joe Schmo would. They usually guess right because they have technology and data to crunch, and they crunch it in record time, and they usually guess right than wrong.
That's why these insurance companies are so profitable.
Yeah. And that's why
insurance companies are the only companies that have been paying dividends every year for over 200 years.
No, I didn't know that.
Yeah.
Damn.
Yeah. But everybody,
you talking about since slavery, they've been paying dividends.
Bro,
crazy.
New York Life owned slaves. Prudential owned slaves. Who else? Yeah, you didn't know this?
Yeah, I knew that.
Hold on, now I gotta show you something.
Also, the underwriter
John Hancock.
No, it's like an English company.
Lloyd's of London.
Lloyd's of London, yeah, yep. They also was involved in that.
I gotta show you this. So this was written by Michael Ralph, who's now no longer at New York University. He's at Howard University. Right? So I just want to read you this, right? So this is Josiah C. Knott, Life Insurance at the South, in May of 1847. In life, we're in the midst of death, and a day or hour may paralyze the hand which feeds the helpless. In a country like ours, where with untrammeled energies and eager grasp, we are pressing along the road which leads to fortune and greatness. We sometimes travel too fast, and great commercial convulsions are inevitable consequences which bring one on individuals the most prudent and cautious. Take a person so situated with the uncertainty of life hanging over him, and how much more cheerfully he would toil on, could he say, "Come what may, my life is insured, and my wife and children are sure of something to save them from want." Josiah C. Knott, Life Insurance at the South, May 1847. Same year. As long as the Negro is sound and worth more than the amount of the insured, self-interest will prompt the owner to preserve the life of the slave. But if the slave become unsound and there is little prospect of perfect recovery, the underwriters cannot expect fair play. The insurance money is worth more than the slave, and the latter is regarded rather in the light of a superannuated horse. Josiah C. Knott, Statistics of Southern Slave Plantation, November 1847.
Gotcha. Wow.
That's wild, right?
Yeah. I even heard Wall Street, as we going down this rabbit hole, the original Wall Street from 200
it's a Negro
years
slave
ago.
burial ground.
And also it was they were trading slaves on Wall Street.
Yes.
Physical
So if you go across the street from the New York Stock Exchange or like 100 Broadway, there's something called the Trinity Church. Obviously, me having been there. So this is the Trinity Church right here, right? Lower Manhattan, right? You see it all over the place. Yeah. And then you see all these skyscrapers and shit. My office was right across the street from this. This church was built on where they buried the slaves that didn't get sold.
Oh, shit. Holy shit. Damn.
Yeah. Damn. Crazy, right?
Yeah, that's wild.
I'm gonna show you one more thing with this slave insurance, and then I'm gonna go to these numbers, and then I'm gonna show you a couple more things, and then I'm gonna hop off.
Okay.
Right? So, peep this. You ever heard of somebody saying, I got life insurance from my job? So your sister was lucky, but generally they put COLI on people. Now, a lot of companies have stopped this because they got found out. But on
Yeah,
August,
I had insurance at my job too.
your
The
job
job
had
that I had.
insurance on you.
Yeah,
On August
I wouldn't be
25th,
surprised.
2011, NBC had reported a scheme that then presidential candidate Rick Perry had concocted in 2003 to take out life insurance on retiring public school teachers. The rationale behind Perry's indecent proposal was that the senior citizens had a high statistical probability to die within the next decade, and when they did, the government of Texas could turn a profit. Michael Moore examines a similar practice in his 2009 documentary, which I've watched, Capitalism: A Love Story, through a devastating revelation that a number of Fortune 500 companies, you ready for this? Including Bank of America, Citibank, McDonnell Douglas, Hershey, Nestle, Walmart, Procter & Gamble, and American Express have made use of what industry or insiders like me call COLI, or corporate-owned life insurance.
Right.
Also known as dead peasant. So now, Pete, here's why people got to realize and not get it fucked up. When Daniel L. Johnson died of cancer, Amagi Bank made more than $5 million on policies it took out on his name, but never shared with his dependents. Now I'm gonna close that.
Wow. Yeah, I knew about the Walmart thing because they had an expose on 60 Minutes about that. They got
About
caught.
Walmart taking dead peasant insurance.
Yeah, because you gotta think, right? There's Walmarts everywhere.
Yeah.
They kind of downsized a little bit, but it just announced a week or two ago. Elizabeth Walton, I believe, one of the Walton women, became the richest woman in Forbes. So, and that was primarily through Walmart in the holdings, right?
Probably
So,
Walmart and Walgreens.
no, Walmart. It was Walmart. So I mean, Walmart could buy Walgreens with that's like a cup of coffee to them. But the thing is that yeah, she became the richest woman like last week or something like that. But yeah, you gotta also think this related to the insurance. Walmart is everywhere, and they got probably what, like 100,000 employees.
Yeah.
Out of 100,000 people, things happen, car accidents, all kinds of things happen. Out of those 100,000 people, it's gonna be what, 10 of them gonna die a year, possibly even more.
Right.
I mean, they got $1 million policy on an employee. Probably they probably can afford probably 10 million. I mean, that person dies.
When you're buying insurance on an employee, because I've sold some of these, it has to be reasonable, right? So it has to be, listen, if you lose this person, what kind of loss is your company going to expect? Right.
Okay.
So let's say you and I are working together, right? You have the computer biz, right?
Yeah.
And I'm just a silent investor, but I'm the CEO, right? Because I gave the seed money. And then I turn around and say, well, listen, if Abdul dies, if he got hit by a bus last night, I'd have been losing money, right? I can't say I was going to lose $1 billion. Now, $1 million is reasonable. They could say, well, over the course of 10 years, he's worth $100,000.
Yeah, if it was $1 billion, you would have helped me direct to that in front of that bus. But yeah, you're going into where it's kind of less gray area, more ethical, because let's say we got an investment group. It would behoove us to have some type of policy, or not so much investment group, but business. You're the co-owner. I'm one of the owners. If we would have a policy, because if one of us dying will be a pivotal loss to the company, to the business. So it would make sense to have a policy, So
That's
yeah,
actually, there's something that they have, which probably Tom Brady's dad does, which is called a buy-sell agreement. That's what you do with businesses.
right.
So
Yeah.
let me continue here real quick. So remember now, he only dropped money in for 6 years, but it's a cash value policy. So he's literally buying term and investing the rest because he's only paying for 6 years. After he put in $222,000, at the end, he's got $221,000 that he's growing 9.5% compound interest on, but we only show him 5.9, right? So we can be modest. So if things don't go as well as we say, so technically this is really midpoint, not this. See what I'm saying?
Yeah.
So now let's look at, because the average time horizon on an investment is 20 years, right? So let's look, age 68. Remember, he's only come out his pocket $222,000, but now he's got cash accumulation value and cash surrender value of $441,000. So if I do 222, right, and then I subtract, what is that, 441, 733, that means that the insurance company over the past 20 years has paid him $219,733 to make sure that when he dies, his family gets $639,000. Right? Now that's if he doesn't touch a dime. Let's say he borrows some money from this. Let's say he borrows 200,000 from this 441,000. What happens to this 441,000 number? What do you think?
That basically gets reinvested, I believe. I don't know.
No. So normally, if you have a brokerage account and you got $441,000 and you borrow $200,000, right? You're gonna earn interest on $241,000 because $200,000 is gone. Right. So you would assume the same thing for the life insurance, except that's why rich people love life insurance, because there's this thing called uninterrupted compound interest. So this 441,000, when I borrow 200,000 from it, it's still going to grow interest as if the whole 441,000 is there. Right? So all this doesn't get interrupted, even though 200,000 of it ain't even there. Right? That's wild, right?
Yeah.
So,
it's crazy.
Now, let's look at 30 years, right? Because we were looking about 30 years in the future. So in 30 years, wait, his death benefit is increased. His death benefit is $817,000. Why? Because there's too much cash value growth in here. And now it would be breaking the law if we don't give him an increased death benefit.
Right.
So he's got almost as much cash value as he does death benefit.
And he don't have to contribute anything at this point? Because I see
paying
zero.
at age 54.
Oh, okay.
Right? So now we're at age 78.
That's like a low key. I mean, I ain't rich, but that's like a rich man's laugh.
That was a rich man's laugh.
But it ain't no moo-ha-ha laugh. But
he said it ain't no moo-ha-ha laugh.
Like that.
That's funny.
Yeah, that's crazy though. That's wild, man.
So what I want to do is I want to show you, because you asked a very important question, right? And that question that you asked was, well, how much does it cost for, a regular person, right? Or a regular,
a person that's not a millionaire.
You don't have to be, right? But first things first, I want to show you something different. Because, oh shit, I didn't even show you this shit supercharged on steroids.
Oh, okay.
So first, what I'm going to do is we're going to go percent of target. So I want you to see what $37,000 a year would actually get him in death benefit. Right? So remember, this one is getting him a $639,000 death benefit. This one is getting him a $1.6 million death benefit. Same premium, same person. What did I change?
He started contributing, was kind of cut off.
Is it better now?
Yeah. What is different? Let's see. I don't need. It's no cash surrender.
Nope, it's the same cash surrender. Don't look at the
Oh,
guarantee. Yeah, don't look at the guarantee. What you want to look
oh,
at is the far right column.
far
That's
right.
what's
Okay.
actually happening.
Okay. No cash surrender. The cash surrender value. It starts at nil and it progressively grows
Well, there's a
over
reason
time.
for that. And the reason for that is what I said earlier. People don't understand when you're buying cash value life insurance, you're not supposed to buy the death benefit. You're supposed to buy more money.
Mm-hmm.
So in this scenario, he bought more death benefit. This $37,000 will get a healthy non-tobacco user a $1.6 million death benefit. But you ain't buying more money with that. You're buying death benefit. Copy?
Yeah.
Now, if we cut the death benefit almost $1 million, he's paying the same $37,000 a year.
Right.
Right? So what's different? Well, he's buying $1 million less of death benefit. So he's buying more money instead of death benefit.
Mm-hmm.
You follow?
Yeah.
Now, let's put this on steroids. Actually, no. Let's do this. Let's play with this a little bit. Because now that you done the rich man's laugh, I'm gonna make you rich man laugh all the way to the bank. You got to make me get my damn license in Illinois. So you ain't gotta worry about doing business with nobody but me. All right. So $1.6 million death benefit, right? But if you'll notice here, the death benefit stays level, $1.6 million all the way through. And this policy only lasts him until age 77. Right? This policy where he bought less death benefit runs, damn, at age 77, like at 78, he's got $700,000 worth of cash value and almost $800,000 worth of death benefit. But look at what he's got at age 88. He's got $1.4 million of death benefit and $1.3 million of cash value. Let's say he keeps going. Let's say he lives till 108. He's got $4.2 million of death benefit and $4.1 million of cash value.
Right.
Right?
Yeah. It goes on and on and on in perpetuity.
Right? Now, we're going to go back to the real numbers here. So this one, right? He bought a $1.6 million policy, but it only lasts until 77. Well, I don't want that. But that's what a lot of people end up putting you in when they buy the IUL. Which is why you were like, oh, well, now you probably were thinking of that because generally I show and offer the IUL the most. I don't know if you watch any other, financial guys who talk about insurance, but a lot of these guys talk about the IUL as if it's sliced bread, and it's not. Because when they set this up, they're getting paid 50% of that $37,000, right? When I set this up, I'm getting paid 50% of $14,000, right? So, like I tell my clients, you're gonna make me rich, but only if you benefit more. So, which one do you think is more beneficial to you? This one where I get paid half of 14,000, or this one where I get paid half of 37,000?
Shoot, probably the second one.
This one, right? Where I get half of 14,000. Number one, I get paid less, right? Which that don't matter to you because the insurance company pays me, so you don't give a fuck if they pay me $1 million or 14,000. That don't come out of your money. But what does come is your cash accumulation gets better. So now let's see what we did here. Well, I did one thing, right? If you'll notice, what do you see changed here? The death benefit option. We have option A or option B, right? So with option B, as your cash value grows, your death benefit grows. So he's not going to stay with the $1.6 million death benefit because year one, he's got $25,000 of account value, which means that adds to his death benefit. So as time keeps going, let's just look at year 20. He's got a $1.7 million death benefit. You see?
Yeah. Yeah.
Okay. Now, I'm about to supercharge this shit and put it on steroids. You ready?
Mm-hmm.
Same 37,000.
Mm-hmm.
I ain't been going this. I've never had a live this long. This is lit.
Yeah, because it's very interesting. Very.
Now,
I might have to download this shit because it's probably one of the classics, maybe.
Word. So if you'll notice now, remember, hold on, let me move this one next to this one. So this is the one where you're buying less death benefit, more cash value. That death benefit is 639,000. Remember, I told you I was going to put it on steroids. So this death benefit is 531,000. Right? Okay. So at the end of 10 years, he's got 255,000 of cash value. At the end of 10 years, he's got 262,000 of cash value.
Yeah.
So now let's look at the end of 20 years here. At the end of 20 years, remind you, he stopped paying at age 54 in all these scenarios.
Right.
At the end of year 20, he's got $441,000 worth of cash value.
Mm-hmm.
Right? But he's also got a $639,000 death benefit. Now, this one, his cash value doesn't accumulate as fast, right? It's 436, but he's also got a $960,000 death benefit. So, so here's where the devil's in the details. Because you never want to borrow from your insurance policy.
Right.
You really want to borrow against your insurance policy.
Okay.
Right? So when you borrow, because when you borrow from it, let's say year one, you put in that $37,000 and turn around and want to borrow from it. You can borrow from that 17,000. Or you can borrow against that 564,000, which is a bigger number.
The death benefit.
Right. So I would use that as leverage or collateral. Right? If I came to you and said, yo, listen, I need to borrow some bread, son, but I got 18 grand, right? And I need to borrow 250 racks. All right. But if I came to you and said, yo, I got 564,000, I need to borrow 250 racks. You got an asset that's worth double what I'm, right? No questions, right? Hands down.
Right.
So that's that delicate dance, and that's where a lot of fake ass advisors get you fucked up because they're like, buy term, invest the rest, because you're thinking you can leverage this, and you're thinking that your investments are going to grow so extravagant. But the only ones who pretty much are able to trade at that is, like you said, them fucking computers.
Yeah.
I can't do it. You can't do it.
Yeah, I'm glad I caught that because, I'm thinking it's kind of like pre-computers, like maybe the 70s, because they've been trading with computers since the 80s.
Yeah. Well, IULs. What's up, Reckless Ray? What's going on? I didn't see you there. So IULs did not exist until 1997. Okay, and that's why. That's why a lot of people speak against them.
Yeah.
But it's also the fact that a lot of people don't understand how they work, and they completely destroy and misrepresent this to the general public. Your average American has no business investing in an IUL. And I know I said investing and insurance don't go together, right? But if you looked at what I showed you, it looks like an investment. It doesn't look like an insurance policy. You know what I'm saying?
Yeah.
So you shouldn't allocate money to an IUL unless you can afford it. And then you don't have to really worry about losing. But then there also becomes an IUL is not a set it and forget it product. It's set it and forget it for me because I sold it to you. Once I sell it to you, hey, listen, I got half of that $37,000. I'm the fuck out. I'm going to go buy me a Porsche. Buy me some Newports. Hit the trap house. You know what I'm saying? And then that's it, right? But what happens is that 1 year point to point. In fact, hold on. Before I shut this down, because I didn't go through, right? So these are the index universal life insurance rates. So again, we illustrated, I showed you that you're currently going to get 5.92%. But what you're actually going to be getting is 9.25%. So when I come back to you next year, because 1 year point to point is that means from January 1, 2024 to January 1, 2025, we're mirroring the S&P 500. We're going to cap it at your 9.25%, but we're going to give you 100% of whatever the highest interest is towards that 9.25%, right? So if the S&P goes up 20%, no, you're not going to get it, but you're going to get 100% of that 9.25%. Make sense? But then you need to call me and be like, yo, Zoe, it's 2025. I don't know how the S&P is doing, and since we're doing 1 year point to point, I need to reallocate. Or you might want to just stay the same. Most people are going to want to stay the same, especially when you see that you got double what I told you. Right? So then you might look at the sector rotator. So I wanted to look at this. Let's look at what the S&P 500 sector rotator is. Because I'm promised we ain't heard nobody talking about it. Hold on, let me remove here. Stop screen. My whole screen. Right? You don't hear a lot of these financial quote unquote gurus talking about the sector rotator. Oh, yeah. 1 year return, 4.89.
I'm gonna be right back.
Yeah. So with a 1 year return, and this is the sector rotator. Let's see what it says here on the sector rotator. What are we at? So there is no cap rate, but we're participating at 188%, right? So if this sector rotator grew, right, you can look at month to date is down, quarter to date is down, year to date it's up, over 1 year it's up 4.8%, 3 years is a negative 0.5% return, 5 years it's a 1.1% return, and over the course of the last decade they've had, and that's generally how you're going to look at indexes and index funds and ETFs and stocks. You shouldn't be looking at the 52-week moving average, which is the 1 year, right? You generally shouldn't even be looking at the 5 year. What you want to look at is 10-year historical data. That'll kind of give you the ability to actually gauge what you're looking at, right? Otherwise, fact sheets, methodologies, right? So this is a multi-asset managed volatility risk control, right? Now we're only on the damn. They got the Ken show, S&P 500 dividend growers, RC2 7.5, Kenso liquid futures. And this is, if you want to invest in it yourself, it's the Bloomberg ticker SPX SRT 5E. Right? So that's the S&P 500 sector rotator 5%.
Let me send you somebody. This guy's a multimillionaire. He's in the cannabis, the cannabis industry. Let me send you this guy's
I'm not
info.
familiar with the Mark V. So this is actually this. Oh, that's why. So, because I was going to say this must be new rates. I was only going based off of October's rates, which were the 9.25%. But we actually added a new index, which I'm not familiar with, which is this S&P 500 Mark 5% index, 1 year point to point. And they're at a 196% participation rate. So just like with the S&P 500 RC25 at 188%, and I told you it was what, 4%? So remember, you're going to get 188% of that 4% growth.
Yeah.
So let's look at the Mark V. So they're at a 9% year return. Let's look at their 10-year, 3.5%. So, S&P is pretty safe, right? Year to date, 5.2. Quarter to date, -1. And their month to date, -1.5. So maybe Trump isn't that good for the market like they're telling you, right?
He's not in office yet. He's got
They just sent $6 billion to, but the market's going to fluctuate anyway. That's what it does. It's like
January 1st, I believe, or
January 20.
Yeah.
So the Mark V is multi-asset risk control. It provides multi-asset diversification within a simple risk-weighing framework, tracking 3 underlying component indices that represent 3 asset classes: equities, commodities, and fixed. Oh, I like the Mark V. I like fixed income. And I like commodities because everybody drinks orange juice and eats tomatoes, right? And then the total return version of the Mark V includes an interest rate on the cash outlay, which is calculated using the effective Fed's fund rate. So I just wanted to look these up. I'm gonna check your person in one moment, bro. I just want to see some of these indices that we're looking at.
It's I don't know him. It's just somebody you might be interested. You know.
I'm gonna get to that in 1 second.
Yeah. No, you don't gotta open them up.
No, I'm not gonna open it on.
I'm just saying, like, you know, you might, if you get his email, maybe able to send him some information or something or whatever. Yeah.
So this is the BNP Paribas or Barclays, right? Multi-asset 5 index. So as you'll see, they're not letting you get into derivatives. Oh no, they may enter into derivatives. I'm sorry. So this is basically like the prospectus, right? And it kind of tells you everything about the company, the third-party licensors, what you're getting into, this, that, and the third. And I never see nobody look at this.
No.
Right?
Nope.
Let's see if I can pull up one more. I meant to open that in a new tab. And that's the growth IUL. The 3 S&P 500 sectors as of July 2024 are consumer discretionary, consumer staples, and utilities. Woo! And then they have a flyer on it. Now, remember also when you asked about the price of life insurance, and I told you it really depends on the type of policy you get as well as the type of policy you get. So why did I say that? Because, for example, my favorite IUL is this called the growth IUL. Forget the carrier name. All insurance companies are going to have 3 types of permanent life insurance, whether that be whole life, universal life, or an IUL. I do not like variable life insurance. But I like index universal life and I like whole life. I also do not like universal life insurance. I think universal and variable life insurance are fucking garbage made to take your money. So if you'll notice here, this says growth index universal life, right? Then they have value plus index universal life. I'm surprised they don't have access. Okay, well, there's also, this one is a survivor, which would be joint and survivor. So this would be, for example, if you get one, you and your spouse get an insurance company, insurance policy together, right? So that's what that would be. But so growth is going to be the most expensive of the permanent life insurance policies that you get. Why do you think that is? Because it's built for growth, right? So then you'll have Value Plus, which is going to be the least expensive. Why do you think that is? Because they want to make it the cheapest, because it's the Value Plus. Then you'll have the Access. Technically, Access is more expensive than Growth because that's made so that you can access the cash value within a short period of time. Right? But I'm going to get ready to hop off because I just realized I'm going for 5 hours.
Yeah, it's been great, man. But I'm gonna get up out of here myself. I gotta go make some bread.
Shit, I ain't mad at you.
Yeah.
So listen, ladies and gentlemen, it's your boy. She says in the cloud the whole time, but I got to rewatch to understand. Thanks, still listening. I'm glad. Seeking my creator. By the way, did you get the email that I gave you about the black women being better off dating outside of black American men? And again, I don't believe that because I don't believe in race mixing. I think black American women should only date black American men, or not date, but should only procreate with black American men. That's my personal belief. Am I going to impose it on anybody? Possibly. Right? Am I upset at anybody for doing otherwise? Hell no, because I got some family members who are mixed. And I love the shit out of them. And if they weren't mixed, they wouldn't exist. Right? But at any rate, ladies and gentlemen, it's your boy, the insurance junkie, your fiduciary fella, the all-star advisor, Alonzo Hall, your social media insurance broker, and I just whapped and tapped on your head with yet another ADH Wealth Solution. Make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share, share, share. Lastly, to contribute to channel growth, or to schedule an appointment with a licensed financial professional, the links are in the description of this video. With that being said, ladies and gentlemen, wipe ass, work in progress every day and see success. And remember, folks, when people challenge you, they don't challenge you to challenge you, but they challenge you to challenge you. Accept the challenge. Salute.